Good afternoon, everybody. Welcome to this week. Oh boy, what a week it has been. We got lots of news. We got a GDP report. A GDP report dropped on a Friday, and it's not great. We're going to talk about that in just a moment. The channel members, I have started to send a little bit of swing trade stuff out to the channel members. So that's kind of a new thing for the channel members. So just to give you guys an idea, those of you who aren't channel members, what the channel members get right now, currently, they get to watch videos, well, one day. So Tuesday's video is coming up on Tuesday, which is going to be the bank review. And I want to talk about that in a moment as well. The bank review, you will see that tomorrow. They also get an exclusive live stream every month. In addition to that, they get to choose the final video. So the video that dropped, the last video that dropped, that was their choice. The channel members chose. Now everybody gets to throw their ideas in. So I will usually hit everybody first and say, "Give me some ideas," and I take the best four of those to the channel members, and then they decide. All right, a new thing for the channel members now is my swing trade report. So I'll be making some swing trades here and there, and I'm going to give a heads up to the channel members, let them know exactly what I spent it on, and more importantly, when I've taken the profits. So all of that is going to come out. So last week, for example, I had, of course, the NVIDIA swing trade. So, they learned about, where I got in and where I got out. Because those of you, of course, you're probably thinking, wait a minute, that NVIDIA thing didn't go so well. Well, it didn't, but there was a small window in the morning where you can get out with a profit. And that's what I did. I decided to get out with a profit opposed to waiting. I know NVIDIA, if I had missed that window, I'd be still holding them. I'd be waiting to get out, and that would be fine. So that's a type of information that I am sending off to the channel members. So channel members is it's a good place to be. It's a good place to be, and I'm always looking to find new ways to enhance things for the channel members. All right, I did mention I wanted to talk a tiny bit about the video. So the bank video, I changed it up a little bit this time around. So I cut back a tiny bit on some of the statistics I was reporting. I just boiled that down to some of the better ones. Also added a few statistics that I wasn't reporting, and I added a little bit of a surprise. So we did 6, got the little 2, and we got one more. There's one more in there that's gonna be in the video, so you'll have to wait. Well, the channel members until tomorrow. The rest of you on Tuesday, find out what that is. It's actually very, very exciting. I was surprised. I was legitimately surprised with one of the results. So that's going to be fantastic. All right. Now, as usual, I like to get story number one out of the way before I hit the chat, and I'm dying to hit the chat. But we'll do that. We're going to head on over to our top story. And of course, without a doubt, our top story is, of course, the GDP, because Canada's economy, it just hit the brakes. Shrinking, well, actually, it shrank for the first time in nearly 2 years. And while tariffs from the US are hitting us hard, household spending, it is keeping the lights on. So let's dig into what some of these numbers are telling us from Friday's report. So the headline number, the one that everyone's talking about, the GDP contracted 1.6% annualized in Q2. So that, once again, the first quarterly decline in 7 quarters. And here's the thing. We weren't expecting a 1.6% drop. Analysts were expecting a 0.6% drop. So meaning this was far worse than what was forecast. So it did catch everybody a little off guard. So what was driving this? Why did we drop so much? It's all about exports. So exports, oh boy, they were down 7.5%. Now that is the steepest fall in about 5 years. they're directly tied, and we all know this, US tariffs. It's the United States' fault. We'll blame them. Business investment in machinery also fell, so it wasn't all tariffs. So business investment in machinery and equipment, that fell 0.6%. That's actually the first decline in that category since the pandemic. Goods producing industry also saw their third straight monthly decline, but it's not it's not all bad news. So the economy, yeah, well, we had a few things trying to keep the economy going. So household spending, and I kind of hinted at this at the top. Household spending was actually up 4.5% annualized. Residential investment also up 6.3%. Government spending, well, no surprise there. That was up 5.1%. Just as long I don't mind the government spending, as long as you're spending it on the right stuff. That's what I always say. So together, all of that basically boosted our domestic demand by 3.5%. So exactly, how did the market like this? So the Canadian dollar, it did slip a little bit. It slipped down to 72.62 USD. Two yields also dropped as investors were betting on some softer policy and money markets. Well, they're the Bank of Canada now, and they're saying, well, gosh, you know what? There's a potential rate cut coming up on September 17th, and they thought there was a 40% chance that we would get a rate cut on September 17th. They have pushed that up to 48%. So it's kind of a 50 now. That's very close to a 50-50. So on uh, on September 17th, of course, there is more data to come out before then. So we'll see if that will revise this up or down. But we might get one. We might. It's kind of cool. So looking forward, June's GDP for the month, that was down 0.1%. So that does mark 3 consecutive months of contraction, which is the first time we've seen that in 3 years. However, July is actually looking to be above board. So right now, and this can still change, but early indications are that July is gonna come out at less than 0.1%. So we could have a little Q3 could be a little bit stronger. So we'll have to see how this is all going to boil out, boil down. I guess boil down's a better word. So if, of course, the slowdown continues, the Bank of Canada, I think they're gonna have to make a move to cut rates. And I think, cutting rates, of course, is gonna it'll pressure the loonie. It should lift bond prices and potentially provide support for some interest rate sensitive sectors, like, of course, and 2 of my favorites, real estate, so all of the REITs could benefit, as well as utilities, and I like both of these right now. I think even with a rate cut, I think they're at a point that they're gonna do better. So for equity investors, the bigger risk is that exports stay weak. That's kind of a concern under the US tariffs, and that could drag Canadian corporate earnings lower. So we could see a little bit of roughness ahead, but it's hard to say. I will say this right now. No matter what negative stimulus we have been running into in the economy, it has been we've been bouncing back much better than I noticed you guys you know what? I That's on me. That's on me. I forgot to turn off that one feature. Just give me 1 second, guys. Let me pull this off because then everybody can be good. There we go. So yeah, it's a weird thing. So when I'm filming videos, I have to u I need echo cancellation on. Otherwise, it doubles my workload. But we've noticed lately that some people, if echo cancellation is on, have problems hearing the audio correctly. So I have fixed it. I have turned off the echo cancellation. Now everybody should be able to hear. Um, yeah. So all right, that should resolve it. That should resolve it. Okay. That was on me. Whoops. And of course, going into the news and not seeing the chat initially, that's that makes it a little more difficult. But number one story is done. We're through with the GDP. Let's get in here. Let's check in with the chat. Jonathan says, "Am I late for the court's tariff appeal?" You are not late. So yeah, that was breaking news. I do not have a news story on this, but in a nutshell, the U.S. One of the U.S. courts basically declared that most of Trump's emergency tariffs are illegal. Now, does that mean they're going away? No. They're letting him keep them up while they wait for appeal, but the appeal has to happen, I believe. I don't know the exact date, but it's in October. So we'll have to see where that goes from here. But this is, I think a lower court initially had declared them illegal, and now a slightly higher court has declared them illegal. But there's an appeal. There's an appeal. And of course, we all know where this will eventually end up. It's going to eventually end up at, well, the big court. The big court in the land, the Supreme Court. And chances are, I mean, Trump has stacked the Supreme Court. Chances are he'll win an appeal if it gets that high. So these tariffs aren't going away. Our only hope really is if there's some kind of a deal between Canada and the United States to try to knock some of this down, and we'll talk a little bit more about that as we get into some of the later stories. All right, Brian is in the house with a good afternoon, everyone. Bismarcky says happy Sunday, and we got Enid in the house with a good afternoon. Oh, Enid, it's good to see you. King of Day, happy Sunday, everyone. Hell on earth here in Calgary, 27 degrees Celsius, heat warning in effect. All right, so you guys know in the summer, I switched my beverage of choice to an iced coffee. Well, guess what? I do not have an iced coffee here. This is a hot coffee. Very good. And the reason I had to switch is Calgary stole all of our heat. We actually had a bit of a cold front that came down through Ontario. And the last week, it's been chilly. I've actually had to add an extra blanket at night. It's been cold enough. So, yeah. Apparently, it's going to get warm again in September. But today's actually not so bad. Today's a lot warmer than yesterday. But, yeah, so I switched back to regular coffee a little early. And, of course, I've switched back now. So I'm back. It doesn't matter. If next week is hot, I'm not going back to iced coffee. Iced coffee's done for this year. 2026. 2026, I'll have some iced coffee. All right. Lisa's in the house with a hi, everyone. We got Rory here. Hi there. And Mary. Of course, Mary is the official captain of the like button. So if you don't want Mary giving you a glare, be sure to hit that like button. And it's not just about avoiding Mary's glare. It does help the channel. It helps the algorithm push this out for more folks. So definitely, please hit that like button. MC is in the house. Cool. I thought there was no show this week. Oh, no, there is. Thanksgiving Day. So Canadian Thanksgiving, because I know I've got some Americans here as well. So whatever that is in October, that's the 1 week where we don't have a show. Because I'll be with my mom. My mom will be in town. And I don't think she'll let me have a show. And that's fine. That's going to be that 1 week. But yeah, no other interruptions that I'm aware of. Unless something happens, a weather event, power event, I get hit with some kind of flu. I mean, anything could happen. But right now, I think we're good. Jordan is in the house. Afternoon there, Candace. I see I got a gift sub, so thank you to whomever that was from. You gotta love that. That is an ability, guys, that you guys can do. If you want, like when you're looking at ways, how can I support the channel? You can gift sub memberships. It's kind of a cool little thing. So it's a way to share the fun with some random person. You don't have any control over who gets it, but that's always fun. Joe is in the house. Happy Sunday, everyone. And then, yes, we had a couple of audio issues because I had that echo cancellation on, so it's off now. Roku says bully McGuire. No, Belly full of dim sum, chair reclined, like button pushed. On with the show. I love it. I love it. Okay, let's see. I'm going to skip past the audio ones because we fixed that. We fixed that. The audio is absolutely fixed. All right. Let's see here. Audio, audio, audio. SCOTUS. No, that's not audio. The Supreme Court of the United States. Yeah, the big one. The big one. The mayor says the U.S. Constitution is falling. The Constitution is falling, is failing to protect the country's institutions. Yeah, I mean, we're seeing stuff in the United States that I honestly, if you had asked me 10 years, would I ever see any of the things that we're seeing today in the United States? I would have bet. I would have bet with high certainty that the answer was no. But it doesn't take much. I guess liberty is not as solid as we'd like it to be. That's for sure. Taco Supreme Court. Yeah, who knows? Clive is in the house. Good afternoon. Are the weather maps around southern Alberta red, scorching hot? Maybe. I'm loving this weather. Some people do, it's nice that it's not really, really hot. I know during the beginning of the year when my air conditioning wasn't working properly, that was brutal. But then ChatGPT told me how to fix it. It was fine after that. Jim is in the house. I watched a news piece on the tariffs, and there was an expert that said that Trump will just keep it in court as long as he can. Of course he will. I mean, his goal is to get it eventually up to SCOTUS, or, the Supreme Court. If he gets it up there, he's probably gonna win. So that's the thing. But he'll delay it. He'll delay it. He keeps things tied up. And that's one of the things. Trump is one of these people that he'll create as many messes as he can, so that way their people can only focus on one or two at a time, and a few of the other ones can maybe slip through. It's a strategy. It's working. I give him credit. It is working. What can I say? All right, King of Day says, exited my hot position on Thursday after a huge jump with 122.95% return. That's fantastic. That is absolutely fantastic. And I say this a lot. If you've been here for a while, you've heard me say this a million times. But there's never anything wrong with taking a profit. Never. And what I always say too is don't ask yourself that question, but what if it goes up higher? Because I can tell you a lot of people with that attitude have let a profit ride, and then it turned around on them when they weren't looking, and all of a sudden they lost that profit. So it never hurts to take a profit. At the very least, if you're worried and you're thinking, what if it goes up higher? There's nothing wrong with throwing in a stop loss. As long as that stop loss still has you in profit, that's something that you could certainly do as well. If you happen to have a broker that happens to offer trailing stop losses, that's even better, because then it will move up with the asset, and you usually get a pretty good return on that. Bismarcky says, "Bring your mom on the show." Yeah, that would be fun. Probably, yeah, it's probably not going to happen, but, my mom, it's not like she's shy or anything. My mom, she, once a month, she holds a little, I don't want to call it a jamboree, but it's like a country music show, that she, she sings and all of that other stuff in it every month. I think there's probably about, 150, 200 people there. So yeah, she's not shy. That's for sure. But, I don't think she's coming here. She's only here for pretty much one full day. She flies in on Saturday, and she's leaving on Monday. So it's kind of that one full day we have to do tourist stuff. That's pretty much, she'll want to go see the Parliament buildings and things like that. Actually, my mom really likes shopping, so she'll probably want to see a lot of shops. Rory says, Adrian did an interview with 9 Point Partners concerning brand new cover call ETFs in Canada. Might take a look. I watched the interview because we were talking about 9 Point the other day, and I told you guys, I said, I don't trust them yet because I don't have the experience with them. And and that's kind of true. They're new to the block, but they may be great. Now, they did explain something about now they're all in one, so they've got a whole bunch of high singles, pretty much the same idea as what Purpose and Harvest is doing. And their single share one, so the one that holds all of them, they actually did something interesting with it. So they're not equal weighting it. So in equal weight, basically, you have the same amount of all of them. They're doing yield weighting. So what that means is whichever one is giving the most yield, they'll have more of them in that fund. Now they did say that they put a cap. I believe they said 15%. So, and that makes sense if you do have one company that's got a huge yield, like maybe Shopify. It's good to cap that at 15% because otherwise you could get that fund where it's like 80% Shopify, then a bunch of others. Because you don't want to get that. That's kind of going against diversification, but they are going with a yield. So that could be very interesting for the 9-point fund. So just a little bit of something to hear. Overall, I did like what they said. There wasn't really anything of concerning in there. So yeah, the 9-point look like they could be the real deal. But as I said, until we get some history, till they've been around a little bit, and we can, because these are their first covered call, their covered call ETFs. I was going to say they're dip into the covered call pool. This is their first time, so I want to make sure. Now, I did hear that there's a lot of experience there, and I like that. I really like that. So yeah. Anybody, if you guys want to check out that interview, because I just gave you a scratch on it. Yeah, just head over to what is it? Passive income investing there. Check out Adriano's channel. He's got a good interview with that. All right. Jay says, let's see, it's less chaotic leading up to long weekends here in Winnipeg when it comes to grocery shopping. Yeah, that's right. This is a long weekend. It's funny. Yeah, it's one of those ones that it's kind of snuck up. I think August has gone by pretty darn fast, but it's been a good month. I've liked August. We've had a lot of really great content on the channel, so I'm pretty happy with August. Jim says, I couldn't believe that Trump won the first time. Yeah, I kind of actually both times I did not think that he was going to win either time. So yeah, he has a way of defying things. But after we won the first time, I thought about it and I was like, okay, I can understand. He's kind of, because he's fresh off The Apprentice. People kind of liked him. I didn't think he was that bad. I didn't think he was a bad person at that point. I thought he sounded reasonable. Well, until with the campaigning, there was a lot of questionable things said, and I'm like, okay. But it was kind of interesting too. I thought, even during the campaign one, any of the things that he said that were outside of the norm, I thought he was just pandering to Republicans and more of the far right. I thought he was just pandering just to get in. I didn't think that would be a sort of a key thing that he would keep going with. So yeah, it was definitely interesting. Oh boy, frog. There we go. Yeah, I really just, I didn't think they were, I didn't think it was something that was going to continue. I didn't think he was serious, but I am absolutely wrong on that. He has proven his character time over and time again. And obviously second term, I thought he had less of a chance of getting in on the second term. Well, not with Biden, but when he was going against Kamala, I thought he had even less of a chance that time. I thought he was already over and done, but no, he managed to win. It was absolutely crazy. All right, Vic is in the house. 66% like rate. Hit the button. Yeah, absolutely. Hit the like button if you haven't yet. Lisa says, it's the oppressive humidity I don't like. The cooler, drier air feels amazing. Yeah, absolutely. I mean, that's the thing. Like, I know, because I've lived in Calgary for a lot. I've lived in Calgary. I'm trying to think how long in total. Maybe 6, 7 years, and two, sort of split in half. And the summers there were great. They were always great. Like, you didn't have to deal with that humidity. And the same thing with the winter. Like, you got bitter cold, but I will tell you right now, I would rather be outside in a -40 cold day in Calgary than in Halifax at -10 with a wind. Because I'll tell you, once you get that water, it I don't know, it just takes away everything. It's not good. All right, Rory says Tuesday's low here is 3 degrees Celsius. Risk of frost. Holy banana bread already. Let's see, it's 26 right now though. All right. Lisa says I like the idea to bring your mom on the show. We'd love to meet your mom. Yeah. I'll have to talk. I'll talk her. Maybe I'll try. I won't be able to get her on the show, but because there won't be a show that day. But I'll have to talk her into getting on video one of these days because I think that would be funny. All right, Bismarcky says, really enjoyed your video this week on a hybrid portfolio. Pretty much what I was looking for in my passive income portfolio. Yeah, and that's interesting. And going back to that video, obviously the channel members chose it, but I really like it. One of the things that's interesting is there tends to be a dichotomy in investing. Like, you are either a income investor or you are a growth dividend investor. It's like you're in either one of the two camps. Well, I think a lot of people are actually kind of hybrid. A lot of people are kind of like in that middle space between the two. Maybe they lean more income, maybe they lean more growth dividend, but it was kind of, I guess, a homage to them, that video, being able to sort of call out that middle space. And I'd definitely like to revisit that space. I will revisit it because you guys have loved it. I think right now I think about 5,000 views or something on it. So you guys are liking it for sure. All right. Mill says, I'm addicted to receiving dinero faster STC day Q day. So those Daymax ETFs, they're paying you twice a month. So it's kind of almost like a regular old school paycheck. So yeah, that's not too shabby at all. I have I think it's Q day. I think I have Q day in the 0 to 100K challenge, but I do like them. I like them a lot. Jim says, yeah, that hybrid video was good. Well, I'm glad you liked it. Brian says, we talked a while back about maybe making Kingston an oil pipeline terminal. I researched the St. Lawrence after that and found that only coastal-sized tankers can make it through Montreal lifts. Yeah, that could be one of those issues too, right? Because there's a lot of there's a lot of stuff that goes on when you're looking at moving ships. A lot of locks. So a lock is basically the ship goes in and it'll then close off and the ship is in its own little contained area of water that will either rise or lower to meet the water level of whatever the next body of water is. So there's a whole bunch of those. So yeah, you would be looking in some cases at some ships being retrofitted. Now, it'll be interesting to see how it's going. That they are talking, and I actually do have a story about Montreal coming up in the port. So we'll talk a little bit more about that here in a bit. Brian says, looks like the pipe needs to get into Quebec. Yeah, well, if the pipeline is going to Montreal, you can't get to Montreal without going through Quebec. That's for sure. Mill says, but I like the idea of yield waiting, and he said he'd consider bi-weekly payments. Yeah, and I like that too. I like the idea of I kind of like the bi-weekly, or at least twice a month. That to me, that's kind of cool. So absolutely, all right. Trump number one. All right, fair enough. King of Day says Trump's winning was all my fault. I was rooting for him, thinking he will be better for the market. Oh boy, was I wrong. And Mill saying, but the market is making all-time highs. It's I don't even want to say that Trump is bad for the market. Trump is he's he's like introduced a level of volatility into the market. And some people are even saying, and this is, there's no proof though. There's no proof at all. But some people are saying that sometimes it seems like he's doing things to knock the market down so that he can get in and maybe make a profit on the way up. I don't know how much truth there is to that though. So I like to base things in fact, and I can't argue with for or against that, but I can't argue that there has been a lot of volatility, and I know certainly as somebody who likes to swing trade, I don't mind the volatility that much. All right. Politician says the market is a casino, not at all based on reality. The banks controlling it when everything else is just gambling. Um, the market, the market can seem like a casino. It can seem like gambling. It can absolutely. However, it really depends. Now, if you are if you're short-term trading, then that is more accurate. If you're long-term investing, it's not accurate at all because the market does go up over time. It always has, and it probably always will. So it's kind of a different rule. But now, if you're day trading, yeah, absolutely. And the reality is, a good day trader is somebody who's slightly more right than they're wrong. And that's by using things like technical analysis to try to give them a little bit of an edge, because day traders they don't win every trade, but they win slightly more than they lose, and that is where they're making their money. So a lot of times, a lot of good day traders, they might only have a 60% success rate, and the other 40% are all losers, and it happens. It happens, but the big thing is, technical analysis can certainly help you. It's not a guarantee because, when you look at a probability, if you have a particular pattern that typically will break to the upside, and let's say it does 66% of the time it breaks to the upside. Well, okay, yeah, it makes sense to make a bet on it, but you got to always remember that other 33% of the time it breaks to the downside, and it's going to happen. It will happen to anybody. It's happened to me, and it'll happen to you if you ever do anything like that. So, yeah, is there gambling involved? Sure, there's sure, especially if also, and just to take it another step further, if you start looking at stocks that have unproven fundamentals. So we're talking penny stocks, for example. That's almost pure gambling at that side. But when you're investing in big companies that have good fundamentals, it's not gambling. It really isn't, especially on the long term. On the long term, keep that in mind. Rory says Halifax or Vancouver, the cold is different. Yeah, it is. It is absolutely. It's much worse. Like Halifax, it's more of a bitter cold. Like it's, I that's the only way I can explain it. It's bitter. It's a mean cold. When you get cold in Vancouver, it's more of a, I don't know, what would I call it? It's more of a drudgy type cold opposed to it's not mean, but yeah, it's kind of all encompassing at the same time. It's weird. It's weird. All right. Patrick comes in with some thumbs up. And see, Mill, nobody in their right mind would vote for KH or Carney. All right. And Nightbot. Oh, come on, Nightbot. That was not spamming. Not spamming. Patrick, you're okay. Nightbot's wrong. Nightbot is wrong. All right. I'm going to skip over. If somebody, we're now at that size, guys, where these weekend ones go so fast that if somebody makes a comment to somebody else, I'm not going to pull those up and read them unless it ties directly into what we're talking about. So we're going to skip over that one. Rory, Carney is still on vacation. His feet will be held to the fire in 2 weeks by the Conservatives. I'm looking forward to seeing the first question period. It should be a good one. It should be a good one for sure. Ian says, I used to be heavily in BHP, only 2 divs a year. Now almost everything I own pays monthly. Don't own anything that pays weekly. All right, fair enough. And my understanding, though, too, is somebody was mentioning, I think, in one of the previous live streams, that we can't go to a 1 week here because none of the exchanges will support it. And that was kind of what has limited us to the bi-monthly or the bi-weekly or something like that. So we'll see how things change. Rory says I'm even leery of the bi-weekly pays. Vic says Halloween candy shrinkflation. Mon Dieu. Interesting. Okay. That is, yeah. It's buy a big bag of candy and it's like you'll get 3 inside of it. It's bad. Jim says Daymax ETF are good. I got Q-Day in my TFSA for a income engine. Yeah, I'm liking them so far. All right. Sanch says BIGY will hold top 10 companies from the US. MAPL will hold top 10 from Canada. Both pay twice a month and both leveraged up to 1.33% or 33 times. Sorry. Yeah, I'm liking. I'm liking some of these new companies. I think are just really, really interesting companies. Some of these new ETFs, and we're kind of like it feels like an explosion. The end of the summer has been a huge explosion of new ETFs, and I'm pretty liking it. And that's I say keep it coming for now. I want to see how creative they can get. Right. Brian says, I forwarded your hybrid video to my daughter who is just starting out with a Wealthsimple managed portfolio. I explained a little and told her I own the last 4 and she should own the first 4. Okay, there we go. Cool. I like that. All right. Rory, if the market is a gambling casino, then so is your pension. Well, that's true. I mean, the Canada Pension Plan, and it's interesting. Currently, my Spotify has commercials on it, and I'm hearing a lot of interesting. The Canada Pension Plan has been putting up commercials, and they're actually talking about the Canadian Pension Plan Investment Board. That's the group that does all the investments, and they're actually addressing that in the commercials. And they're making good money. So investing is definitely good. All right. Mill says hard assets benefit from inflation. Companies are hard assets, and the government creates inflation, so the market goes up. But they need to shake out now, and then it will come after Santa. We are due for a recession, and as I pointed out, we have that 1 quarter of negative GDP now. So we're going to have to see what Q3 comes out as. But if that comes out negative, then we could have a technical recession this year. I don't think they're going to call it, though. I have a feeling that it's kind of really weird. I think the economy keeps doing interesting things, and the way that with the strength in the economy that we're seeing now, and if we can get some of these tariffs under control, that might save us. It might, but there's a good chance. I still say there's a good chance that we could see a recession. I'm still going to say that if it gets called, it won't get called until 2026. Let's see. Thank you for responding to the chat. Much appreciated. Yeah, that's what I'm here for. I mean, I look at it this way. This is a news show, yes, but the news, and this is how I've said this before, I view the news as kind of it's nice to know, yes, but it's also a conversation starter. So we certainly, look at this. We did 1 news story. I still get 6 more. I still have 6 more, and we're like 40 minutes in, and we've only done 1. That's the way it happens. Normally, once I get caught up, I jump in and I'll do the second news story, but there are days I never get caught up and I have to sort of just take a break to get to that second news story and move forward. Politician says, if an ETF gets discontinued, is any money you had invested in it lost? The answer to that, no. You don't lose money. So if an ETF is deciding if they're going to discontinue an ETF, there's a whole bunch of regulatory stuff that they have to go through because they're highly regulated. You know, it's not kind of like somebody in their backyard saying, "Oh, I'm just going to start this ETF." No, there's a ton of regulation, and there's most of it is most of it honestly, most of it is Ontario Securities because each province has their own securities regulator, but they all tend to follow they all mostly follow what the Ontario one. I don't want to say, probably Quebec would be the one that's furthest away from what the Ontario Securities Board does. But yeah, so if they were to dissolve or to discontinue an ETF, they would have to pay you out. They would have to pay you out. You're not going to get to a situation where they just say, "We're just closing this one. Sorry, guys, your money's gone." No, that does not happen. Brian says, I'm collecting my OAS and investing it 100% in my TFSA. Oh, awesome. Well, and that's fantastic because I'll tell you, there's a lot of seniors out there on OAS that don't have that luxury of being able to just drop it all into their TFSA. So that's fantastic that you're able to do that. Heard that Trump is sick. Is that true? I saw something in the news that there was some speculation, but once again, I'm not sure. I'm not sure on that one. So maybe, but I don't know. Tanya says, East Coast, when it gets cold, no matter how many layers, it chills you to the bone. Calgary, layers work. It's only exposed areas you need to worry about. Yeah, absolutely. Funny story in Calgary, I went out one time and it was minus 40 and the wind chill I think was like minus 50 or something crazy like that. And I was bundled. I was bundled to the bone. I thought I was fine. But the tip of my nose was peeking out from my scarf and I didn't know it and I didn't feel it. Well, I did when I got home because it had a bit of frostbite on it, but not enough that it was serious. It was fine. It recovered fine. But that's the danger. I will tell you this right now, because in the prairie, it's the same I think for the prairies as well. Because you don't have that moisture in the cold, you don't realize how bad, how cold it could be, and it is very easy to get frostbite unintentionally without realizing it. You realize it when you get out of the cold, but it's very easy in the prairies. Halifax, you know what's happening. It's bitter all the way through. Let's see here. Fivefold. I got puts on Rivian. Interesting. Yeah, Rivian has not had the best of times. All right, guys. I finally caught up. That means we can move to story number 2. And, we got a story here about job vacancies. So Canada's labor market, it's sending us a little bit, it's kind of sending mixed signals. So job vacancies are shrinking overall, except for, construction. Construction, we're seeing the vacancies actually increase. And at the same time, weekly paychecks, those have been going up. So this is kind of an interesting report. So overall, looking at job vacancies. So June saw 492,000 job vacancies. So that's slightly a rebound because we had a bit of a sharp decline in April and May. So year over year, vacancies are still down 10.7%, meaning we've got about 59,200 jobs that are not filled. And this is showing basically a softer demand for workers compared to 2024. Now, I did mention construction. So construction is kind of a case on its own. So they were the only sector with a significant gain in June, increasing by 13.1% extra vacancies. So basically, right now in construction, there's 39,500 jobs that are not being filled. And that's kind of a concern. If we want to build, we kind of need to get those vacancies moving in the other direction, not increasing them, that's for sure. Currently, the vacancy rate in construction is sitting at 3.2%. So that's up from May. May, we only had 2.9% vacancies, but it is lower than June. So June, we were up at 3.6%. So we do have a little bit of movement, but we need to see a lot more. And I mentioned wages. So average weekly wages, last month they were up 3.7% year over year. So that basically, it's interesting. The 1,302, that's how much people are on average making weekly. So that's not too shabby, I guess. I think there's a lot of people, though. I think if you actually look and break it down, there's a lot of people below that 1,302. But then you got a lot of really high people up there that kind of skew it. Now, month over month, earnings climbed 0.7%, showing steady upward wage pressure, and that followed May's 3.3% annual increase. So why is it important? I always like to kind of touch on why I think this is an important story. Rising wages kind of suggest that there's a little bit of persistent inflationary pressure. So even as job vacancies trend lower overall. So for job investors, for investors in general, this keeps the Bank of Canada they're in a little bit of a tricky spot. So weak growth, but still upward pressure on wages. So it's kind of that whole thing. It's kind of what's keeping the Bank of Canada on the sidelines. Well, one, of course, they can't sort of see that forward guidance, but at the same time, they still see that there is inflationary pressure. At the same time, there's also the whole economic pressure moving in the opposite direction. Now, if you're looking at construction stocks or REITs, the rebound in vacancies hints that labor demand in the sector is stabilizing a little bit. That's a good thing, and that could support some more growth. So this could be good news for REITs. And you guys know I'm pretty. What's the word? Bullish, of course. I'm definitely liking REITs, and I think their time is coming. I think it's coming. All right, back to the chat. Let's just bring this back here. All right, King of Day. Didn't Putin bomb Ukraine after the peace talks with Trump, or did I read it wrong? Oh, no. Of course he did. Putin is playing an interesting game. I don't think he really cares about peace. In fact, apparently he had a conversation with the front lines, telling them to hit them as hard as they can. So that's not somebody who's looking for a peace deal. So I think he's just stringing Trump along, and Trump is getting annoyed because, he's the great negotiator, but apparently not so much when it comes to Russia. Russia has their own agenda here, and I think Russia has no intention of giving up land. So it'll be interesting to see how this all works out. Rory, Bird isn't having a good time either. No, Bird has slipped a little bit. Absolutely. I'm okay with that. Like, I have a lot of faith in Bird long term. So if Bird continues to slip, I will add more. I will just add more because I do like Bird. I think Bird is a really good company, and I think once, we need to get a little bit further down this whole One Canada bill, all of these projects that they're going to start building. We're still a little ways before we even get to the building, the part of actually creating contracts and awarding them. But I think Bird is, I think they're going to get a lot of these contracts. I think they're going to do really, really well. So yeah, if we get a retracement, and well, here, let's take a look at Bird very quickly here. BDT. All right. Where is my Bird? There it is. Bird Construction. We gotcha. Boom. All right. Yeah, and you'll see here, I'm going to pull up I'll pull up the 3-year just to give you a general idea. So yeah, I mean, they were doing fantastic. You can see this coming in, a little bit of a retracement, and they do have a retracement, but they're falling again. Right now I'm fine. Like if they stay down, like I think this $20 mark in here, I think they have a lot of support here. So I don't see them going below that. So right now, I think this is ideal buying time. Somebody dollar cost averaging, if they were starting here, fantastic. they're going to go back up. Like I think there's no question they'll be back up at $30. I wouldn't even be surprised to see them back up at $30. Early in 2026. But the longer they stay down, the more I'm going to buy because I do have a lot of faith in Bird. All right. Let's see. Politician says 22% unemployment, men 15 to 24. Carney's climate dream. Yeah, I mean, it is interesting. It is interesting when you start looking at the groups, the different demographics of unemployment. Like I think one of the worst groups off is young people, 15 to 24. So yeah, that is a group that has been hit hard with unemployment. Absolutely. Let's see. Rory says anti-energy policies are still in place. Let's see. Brian says jobs in the condo markets are drying up. I'm hearing from a few that after the project they are working on, their next project is on pause. Friend of mine has 3 weeks left in condo drywall, then nothing. Yeah. So especially in Toronto, GTA is one of the worst places right now. If you want to build condos, well, why would you? There's so many condos unfilled in the market. Yeah, condos. Yeah, GTA is just having a really rough time with it, and there's a lot. I think this is a story that's happening over and over again. A lot of construction companies are like, we're not going to do any more condos. We're done. We're done with condos for now. Yeah, it's going to be rough, I think, in a while, but it will rebound. Eventually condos will be popular again in Toronto, but I don't see it happening anytime soon. I think once we basically undo kind of some of the immigration stuff that the Liberals did, which we're needed to do, but once we start opening that floodgate again, it's going to have really interesting. I think it'll be very interesting to see how the housing market overall, including condo market, it'll be interesting to see how it actually replies to that. That could be very interesting. Rory says, let's see, heavy equipment techs still have approximately 1.5 to 2 years of work in the AG industry. Nice. Let's see. A politician says inflation is far higher than the faux government numbers. There's a lot of people that think that the CPI basket needs to be updated. I mean, they do update it from time to time, but yeah, in certain areas, you may find inflation to be a lot higher than, depending on what it is that you're buying. Like if you look at that basket, if you're only buying stuff in the expensive part of the basket, inflation is absolutely going to look a lot worse. And right now, food inflation, I think, is one area that is absolutely, I think, rough on most people. I think everybody needs food. So food inflation, not good for sure. Brian says steel construction is the same. Most shops have small projects and nothing big, myself included. I do have one customer that will keep me busy for a couple of months with small maintenance jobs. Okay, interesting. Politician says gonna be a lot of worthless green projects as oil plus minerals remain untapped. I hope you're wrong. I'm not saying that you are, but I really hope you are because we really need to be opening up our minerals, our critical minerals. Doug Ford talks about the Ring of Fire. There's a lot of oil that could be moved out. So I'm hoping the government isn't that stupid. If they are, it'll be a long time before they get back in after this time. They've got a lot they have to prove. And so far they're still talking the talk. But like I said this back at the beginning of the election. I don't want somebody talking the talk. I want them walking the walk. And we will see. And hopefully, as the government gets back in, the opposition gets in gear, hopefully they'll stay honest. Hopefully they'll stay honest and get done what needs to be done. If they don't, they're a minority. They're a minority government, so they don't always last 4 years. Rory says, just look at Germany and see how that worked for them. Ooh, I can't believe it. I'm caught up again. That means we can go to another story. So we haven't, in a while, we have not had an update on the return to office shenanigans. So if you guys remember, remote work was supposed to be the future. Yeah, and I thought it was. I always thought it was. But however, it's quickly becoming the past. So in Canada, nearly 800,000 fewer Canadians are working from home compared to just a few years ago. And that shift is costing families, of course, both time and money. So remote work, it is, I guess we can call it in retreat. So remote work share fell from 17.4% in 2025. That's down from 22.4% of workers in 2022. So we're seeing significant movement, significant movies. In fact, that's a loss of 790,000 remote workers in just 3 years. So the actual head count is we went from 4.4 million in 2022 down to 3.69 million in 2025. So what does that mean? And I kind of hinted at this a moment ago. It's all a part of it's about commuting. So commuting is making a comeback. So 1.45 million more daily commuters in Canada since 2022. And this is interesting. Do you know what the average commute is to work? It works out to 53.4 minutes per day. And if you're wondering, maybe the bus is better. Well, no one's wondering that. With the bus, so public transit users, their average is 88.2 minutes a day. And that's pretty much the equivalent. If you add that all up, that's the same amount of time that you spend on a good night's sleep. So that's a lot of time. And that's the average. I have had jobs where I would basically be spending 2 hours in commute every day. To the point that I would always start looking for a new place to live closer to work. Because I don't like that amount of time spent working, or not working, but spent in the bus or trying to get to work. Now the hybrid growth model, hybrid workers, they're kind of a thing now. So they've nearly doubled from 2.6% in 2022 to 5.1% in 2025. And that head count, well, it rose from basically 500,000 to just over 1 million. So it's still pretty small. So we're looking at about 1 in 20 workers. 1 in 20 workers have that opportunity to work from home. I used to get that every so often. It's kind of funny. Back when I used to, when I was a national training manager, sometimes I would be like, you know what? I'm under a deadline. The only way I'm going to get this done is if I do it at home. Because the reason for that is at the office, in a role like that, the constant interruptions were just crazy. So I'd be lucky to get 15 minutes of work done before somebody was in my office bugging me. So I was just like, those work from home days, fantastic, more productive. And it's actually interesting too. My trainers, one of the things I used to say to them too is I would be like, look, here's the amount of work I need you to get done. I know for a fact you won't be able to get that done here in a day. But stay at home tomorrow. Get it done. I don't care how long it takes you to get it done. If you can pull it off, if you could do it in half a day, I'm still paying you for a day. Just get it done. And that worked. That used to always work really, really well. And I know they would get it done. It wouldn't take the full day, but it was still worth it. Because otherwise, if I kept them in the office, I would have, that would spill into another day. And just didn't have the budget for that. All right. So why exactly are we shifting? What is this shift back to the office all about? So it's interesting. A lot of policymakers and business associations have been, they've been on a push to revive downtowns. And that's one of the things, it's kind of one of the factors that is moving towards a lot of businesses telling people, you got to come back to the office. It's interesting. I think it's interesting. So the rollback, of course, is going to it's going to bring a lot more business, a lot more foot traffic to a lot of the businesses in downtown sectors. It's interesting. I don't know. If I was running a business, I would want to go with whichever is the most cost effective. And working at home means I don't have to have a big complex. I don't have to house all those people. I don't have to pay all of that electricity. or the big higher rents. So I don't know. I would be inclined, depending on what the business is, I'd be inclined to let people work at home. But, you know, I would have, of course, strict rules on them because, there's always that possibility of being lazy and, not doing your work or, getting distracted by home things. But I think it can work. I think it can work. Now, here's that thing. As investors, this shift back to offices, well, one big winner here is commercial real estate, and transit operators, big city services, things like that. But this kind of pulls us back to REITs. So some of those office type REITs, this could be a big benefit for them. So this might be that thing to sort of help them move into a more of a recovery. Because you'll notice with REITs, a lot of the very office centric REITs weren't really recovering as fast as some of the other ones. This is that opportunity. This is that opportunity to change that. All right. Another story done. I love it. And you guys got the comments in there. Oh boy. All right. Politicians. So far, 9 energy proposals from Danielle Smith, all denied by Carney. Is it that many? I didn't know. I didn't know. I thought Alberta was on board with the whole Churchill thing, but we'll see. We'll see what happens. Rory says they'll just prorogue Parliament. Yeah. I mean, all parties do it. Harper did it as well. So, I don't like proroguement. I don't like it at all. Bismarcky, my company is mandating 3 days in the office every week. So yeah, there's your hybrid working. Your hybrid working for sure. Yeah, one of the things I kind of think is if you've got somebody working from home, yeah, occasionally you want them in the office. Even if it's a situation where, you have to come into the office once a month. I'm still, let's see. Politician says remote is great for the employee, terrible for the company. Well, it depends. Like, here's the thing, though. You can't let everybody. I don't think everybody can work from home. There are some people who will take advantage of it. There's some people who will absolutely fart around the whole day and get nothing done. Maybe they'll be playing video games when they're supposed to be doing something else. There are other people that it will work well for. So I think of it. I look at it as more of like a privilege. So I think whatever type of metrics that you use to gauge an employee's effectiveness, I think that you got to be really firm on those when somebody's working at home. If they're not hitting the numbers or if their numbers are dropping, well then they need to come back into the office. As simple as that. And even if it's just you need to come back into the office for a month because your numbers are down, that will probably be enough that when after that month and they go back home, they'll hopefully have learned their lesson. But if they haven't, then the next time it won't be a month. Then the next time it's like, yeah, you're not working at home with this company anymore. Brian says outside of government drones, who really has a work from home job? Well, yeah, it's true. I mean, unless you work for yourself, then that's kind of a different thing. Let's see. Roy says it keeps Milton from burning his own house down. Let's see. Just give him back his red stapler. Oh boy. What was that? Office. One of those Office movies. What was that one called? I can't remember. I know Office was in the title, but I know which one you're talking about. Let's see. Big Grains of Salt. It's a 7-minute. Oh, it's a 7-minute drive to work for me. I go home on my lunch break and walk Scruffy and Chomper. Oh, that's not bad. And that's happened. I have moved. Like when I used to work at Compaq, I had an hour both ways. Sometimes in the winter, sometimes longer. So I found a house, quite literally a 5-minute walk, from Compaq, and I rented that out, and that one was actually good because what I did at that point is I rented it out. There was 2 bedrooms upstairs. I just converted the basement into my area, and then I rented out the 2 bedrooms upstairs. And I basically took the rent that I was paying for the whole house. I cut it in half, and that's how much I charged for the bedrooms. So I had two roommates upstairs, and I technically was living rent free because they were paying the entire rent. Yeah, it worked. It worked. All right. Bob says we need a no Candace video. Would you be comfortable talking about your background? I talk about my background all the time. All the time. Yeah, many times, many tangents on the show. I get into my background. So my degree from university, double major, biology and chemistry. Just throw that out there for you. Obviously, I've moved away from that. I moved eventually. Even I didn't even move to finance. I actually moved to technology and management after that. Um, but yeah, we can definitely. I mean, I will go on more tangents, Bob. Don't worry. I'm not going to go on one right now just because I don't want to get too far behind. But I don't know if I'll make like a, like a, this is your life video. But yeah, I mean, I'll definitely tell stories. I will tell lots of stories. So keep watching, and ask questions. Ask questions. I don't mind answering. I don't mind answering stuff. Subdivisions from Rush just entered my mind. Good album. Good album. Rush is a pretty big band. I mean, we all know in Canada that Rush is a big band, but um, they're underrated other places. But once people do discover them, then they're like, yeah, this is fantastic. Bismarcky says, let's see, most leases are long term, so you have had lots of empty offices they are paying for. Yeah. Yeah, in that case, yeah, there are a lot of empty offices for sure. Let's see. Politicians can't even drive without looking at their phone left unsupervised. They'll be on it all day. Oh, sorry, politicians. People can't even. Yeah, yeah. Sometimes Office Space. Yep, there it is. Bah, it was on the tip of my tongue. All right, let's see. Exactly. Just make a video about like how you went from being a STEM manager to finance. And Zozo Trader has joined the Banana Bread crew. I think that's what we call ourselves. Congratulations. You'll be able to see the next video tomorrow. Always cool. Always cool. Love it. Love it. Love it. All right. Bob says also you can talk about how you decided ended up making this channel. Okay. Okay. I don't know if I'll make a video, but I will. Well, I'll talk about the channel. It was kind of an interesting thing. This is like the channel actually began. We're coming up on our fourth anniversary. So early, early in the pandemic, I was like, you know what? I'm kind of sick of working for other people. I would very much like to make, I'd like to do something. And YouTube, it was a thought in the back of my mind. I was like, could I do YouTube? It's like, it's YouTube is for young people. I'm too old. All of those normal type things. But when I decided that I would do YouTube, I also had to decide, well, what do I want to talk about? What do I know a lot about? There were a few things. I could have made a technology channel. I could have made a science channel. Or I could have made a finance channel. And I was just like, you know what? I think I kind of want to do the finance one. So the way I did it is I didn't make the channel immediately. I basically found a community. Basically another YouTuber at that time, and just sort of became a part of that community, talking a lot in things like live streams, helping people out, things like that, getting my feet wet, getting involved in a larger community, so that when I did make the jump, so when I made the jump and made that first YouTube video, I already had a small audience of people I'd been talking to for a while. So I had a small audience to come right away. So I didn't struggle, because a lot of YouTubers, they start and they struggle for the first 100, trying to get that first 100. I didn't. I had, I think on the day I launched, I had like about 50 subscribers, and built it up from there. So yeah, it was kind of like I kind of just didn't want to jump into it without thinking it through. I like to think things through, and that's kind of the way I moved ahead with that. But it worked out fine. It worked out fine. And now, I mean, now we're making our way towards 8,000. I think right now we're at 77 something. And it's kind of interesting too. It comes in bursts with YouTube, I find. So, we had a nice little slow climb going up, and then I think it actually, the very first video that did really well was a canoe video, canoe EIT. And I went from 400 to 600 subscribers really fast, thanks to the canoe video. And then once again, kept on working at it and built that climb. And then we got to 1,000, and then we got monetized, and that's all exciting and everything. And then, of course, you discover that being monetized means that you're going to make a few pennies every video, because it's not a lot. It's not a lot. And then it just kept on building. And every so often a video would come along that would, give me a bit of a pump. I think the next big one was, I can't even remember, to be honest. But eventually I released my most successful video, which didn't do very well initially. It was actually a OAS video. It was actually about OAS and GIS, and it kind of underperformed in the first couple of weeks. Then, probably about a month to a month and a half in, I noticed it was still picking up steam, and then it exploded again. And next thing you know, that video right now is sitting like 33,000 and something views. I mean, just absolutely exploding. And yeah, every so often there seems to be a jump. Now, in the case of recently, we had another jump, I think. I would say back in July. And now our normal regular viewing on videos has increased a little bit. So now it's very rare for a video to get less than 1,000 views. It's very, very rare. So it keeps on building. And that's the way YouTube will. Like, we can be having this conversation next year at this time, and, by then we'll have more explosions. And every so often, it's a little thing. Now, interestingly enough, and this was kind of interesting. Now, we're off on a tangent. I know, guys. Just I'll finish this up pretty quickly, and then we'll get back to the chat. What was it? Maybe 2.5 years ago, out of the blue, and this is bringing Blossom into the mix. I got an email from Brandon Beavis at the time. And at the time, I was just like, I didn't even have 2,000 subscribers. And, Brandon reached out to me, and he was just like, he was like, I'd like to have a conversation. Let's set it up. And I was like, okay, sure. I'm not sure what it was about, but I set it up and had this video conference with Brandon. And then he was just like, well, he says, I've been watching your channel and I really like it. And I want to bring you on board as one of our ambassadors over here at Blossom. And at that point, they only had a handful of them. So it was like, all right. I'm a pretty small channel. And he says, yeah, but you're going to grow. Don't worry about it. But that's how I got involved in Blossom as an ambassador. And, I promote Blossom because I do believe in the product. But that was at that point that I realized that, my reach was bigger than I thought it was. And it builds, it's like, now I've got this new series, This Week Conversation. So, I'm getting this video every so often where I interview some of the bigger names. Like I had, I started with Brandon Beavis. I started with him. We did a live stream with him on This Week Conversations. And then we had one live stream and it exploded, and that was the Adriano one. So the Adriano live stream, he came on, and oh boy, that's a live stream that's had more than 4,000 views, and that's huge for a live stream, because most live streams, they might get to about 1,000 views after after the people, there's normally about, like, I imagine this live stream here, by the time we're finished, we'll have had about 500 people that filtered in. Nobody watch it. Some people will watch everything from start to beginning, from start to end. I love you guys. You guys are what I call super fans. Some people will come in, watch maybe 30 minutes, then they'll leave. Some people might watch an hour. It's a lot. I mean, these ones tend to go about 2. I designed them for 2. They often go to 2.5. So it's kind of an interesting thing. But yeah, no. So his video with Adriano, that's sitting. Last I looked, it was up about, is it 4.7 thousand? So it's heading towards 5,000. So it's pretty cool. I'm enjoying it. I'm enjoying it. And the fact that when I reached out to Adriano, he was just instantly, yes, I love your channel. Let's do it. So I'm like, all right, cool. So yeah. Anyway, it's a fun journey, and the journey's going to continue. And this is the type of conversation I will, by the way, in October, and that's where, Bob, going back to your original question, I'll talk a lot more about myself. I'll do an about me section in that celebration live stream. I do a celebration live stream at all for each year. So every year, kind of like a birthday for the channel. So October, we will do one this year, and it'll be our fourth, and then next year, in 2026 October, we'll have to do something bigger because it'll be like our 5th year, which is fantastic. All right. Whew. Let's see. Let's switch to Bob's next question. What are your thoughts on technical analysis? Momentum trade is just technical analysis, isn't it? So yeah, technical analysis. So it's kind of interesting. The funny thing about technical analysis is it's not really about technology. It's actually about psychology. So when you look at the at stocks, when you look not at stocks particular, but when you look at the charts, the movement, the buying, selling of charts, it's all about people, right? People are either buying or selling, and that has a psychological motivation to it. So, for example, when people are afraid of the economy or they're fearful, they will start selling, and that price will drop down because as people are selling, nobody's wanting to buy, so they have to sell it for less for somebody to buy it. That's why the prices change. So technically that company, yes, their market cap changes when the price goes down, but nothing really changes. Like they still have the exact same assets they had 10 minutes ago before the price began to fall. So it's basically that psychology between people. Now because we're looking at psychology, human psychology tends to be very predictive. For example, if you think of Maslow's hierarchy of needs, so it's kind of this whole thing where you've got this hierarchy where you got the basic needs at the bottom, you got more complex needs as you move up, and as you get higher up on the tiers on this, you move closer to being happy, to being fulfilled. So a lot of motivation, what motivates a lot of people is that some of their lower, especially the lower the need, if it's not being satisfied, the higher the motivation for different things. So you can use tools like that to kind of figure out what's going on. I actually did a live stream back early in the channel where we actually looked at Maslow's hierarchy of needs and we applied it to investing. That was, oh boy, that was that was definitely in the first year. So that was a long time ago. But yeah, because of the psychology, and the people think in a specific way. That's one of the reasons that technical analysis works. It's basically you're tracking people's feelings. And outside of black swan, because black swan events, yeah, that you can't use technical analysis on a black swan event. A black swan event, something like 9/11, something like the housing crash, something like the pandemic, all black swans. You can't technical analysis them. So when you're talking about momentum, well, yeah, momentum is basically if somebody has momentum, it's because they're technical analysis wise. You usually see that by seeing higher lows and higher highs. So you see an overall movement to the upside. That's fantastic. Usually things in motion tend to stay in motion. If you're looking at some of Newton's laws, in this case, it is psychology though. And it will flip. It will at one point. You will get a break out of, like if you've got a nice channel to the upside, it will break eventually. It may break up. Maybe it'll explode up more to the upside, or it could, of course, drop. And as I mentioned before, a black swan event can completely torpedo a channel. So a lot of times when you're using technical analysis, if you're able to identify that channel, there's money to be made in it. But eventually one of your trades is going to go horribly wrong or horribly right, because it will break out of that channel. And that's why, if you're a good swing trader, you need to have a strategy for when you do break out of that channel, what you're going to do. And we'll definitely talk more about this in the future for sure. Rory says Mutual of Candace, Wild Kingdom of Investing. Oh, I like that. We should get like some jungle sounds, like woo in the background. 10K coming soon for Mountain Finance. Yeah, that'll be cool. That'll be our next celebration, by the way. So as I mentioned before, we tend to have a special live stream when we hit major milestones. So the last one we had was at 5,000 subs. The next one is at 10,000 subs. And the way we're moving right now, I wouldn't be surprised to see 10,000 by maybe, there's an off chance we could do it by the end of the year. Really, if we get a few more explosive videos, maybe. But definitely early 2026 at the latest, I think. Let's see. Yeah, I think for tax reasons, Canadians just love income ETFs. Yeah, income ETFs. I mean, popularity of ETFs has been going up more and more and more. And I'll tell you, initially, if you go far enough back, you'll notice most of my videos were all stock. All single companies, all single company deep dives. And I did realize, I recognized this probably about a year ago, I think, that nobody was really doing deep dives on ETFs, and that ETFs weren't getting as much love as they deserve. So that's why I've shifted a lot more. I still do single stocks. I still do all of the other stuff, but I have brought ETFs a little bit closer to the surface, and people like it. People have absolutely been liking it and been responding very well for sure. All right, let's see here. Perry's PII verse is good to watch. The only pet peeve is he hits his table too often. Absolutely. Well, speaking of pet peeves, I had somebody say that they're very annoyed at the way I end my videos. So I was just like, oh, and they were like, why do you do that? Because as you know, at the very end, I sort of put a little bit of a really high flute at the end of the last video, and I was just like, I don't know, I just started to do it, and I just kept doing it. So I might actually remove that if some, if it annoys somebody. I'm like, it's really no skin off of my back to remove it. So I might remove that little tiny thing. I guess it's like, I don't know. I like to call it a punk ending or something. I don't know. It's kind of punky. I'll definitely remove that. And that also reminds me, I have other couple comments. It's like, what's going on? So somebody was like, it's time to retire Mr. Math. He's it's kind of childish. You don't need to do it. It's just like, all right. So yeah, I'm looking at it, and I was just like, well, okay, maybe, I don't know. Maybe a reduced role or something for Mr. Math, or I'll find a different way to use Mr. Math. But I might just sort of dial back a little bit on him. But anyway, once again, what is this tangent day? It's like, let's just talk about everything but what we should be talking about. All right, Bob says, you should collab with Moose on the Loose guy. His videos are good too. I don't know who Moose on the Loose is. Interesting. And now Rory says David from Moose is more political, not really finance. It might be. Like, we get our politics on, but usually the politics we look at are things that are going to affect us or affect the economy, which of course is going to lead back to, finance and investing. So what if politicians are out there doing stuff that has nothing or has no blowback on finance? I tend to leave those things alone. Now, one exception, I guess, is on this show when I do the news. Sometimes I will bring up a few fun stories just because they're fun. But that's the thing. All right. Bob says, oh, sorry, I meant the dividend guy is 10-minute podcast is called Moose on the Loose. Okay. From his channel description, he's a French-Canadian former private banker. Channel is called Dividend. I think I've seen the dividend guy at least once. Ian says, made a lot of money on stocks when people thought the world was Mad Max in 2020. Yeah. Yeah. In 2020, if you had the capital and you deployed it when the pandemic was called and we had that big drop, holy banana bread, you would have made some good money for sure. Rory says, I've heard of him, Bob. I quite like a few content creators. Adriano from Passive Income Investing is good too. And yeah, as I mentioned, Adriano was on our live stream not that long ago. Bob says, I have a soul of a business major. It's probably anecdotal. But in my experience as mechanical engineer, business folks are way too chatty than us STEM folks, generally speaking. And that makes sense. That makes sense. And that's fun. We've had, like I will tell you on this channel, you do not know what you're going to get. We have had tangents that have gone very deep into science. It happens. It happens. You know, especially as I'm pretty sure we've talked about black holes once too. It's happened. It's happened. All right. Taran says swing ideas to buy. Yes. I will point out once again, Taran. I am reserving my swing picks for the channel members, so they will be getting emails when I come up with a new swing that I want to do. I do email it out to the channel members. It's just a reward because they support the channel, so it's one of the rewards that I'm bundling in for them. So, you know, I will talk about some. There will be some that'll be public. For example, I'm always watching Air Canada, and right now I'm at that point with Air Canada. And let's actually look at this for a second. I'm going to pull this up. With Air Canada, I keep trying to find the perfect, and I've had a lot of good swings on Air Canada. But right now I'm looking for where is that bottom at? Because here's the problem with Air Canada. I'm going to pull up, I'm going to pull up the 10-year because I want to sort of show you guys everything. So this was Air Canada before the pandemic. And then, well, look at this. They landed and they stayed down for a while, for sure. So they, during this big mess, to stay afloat, one of the things that they did is they diluted. A lot of dilution on those shares. So any chance of getting back up to 50 bucks, pretty much off the table. So they diluted and they sort of found a new average down around $17. At one point, heck, sometimes you could get it for like cheap, like 14. And then they would have some goodness, and they would, you know, it kind of got to this point that I was at this point where I was buying it under 15, and then I could sell, and I was doing these swings. Now, we've done some swings on the channel, like this swing here. Also, this one here, right here. This was the first swing trade on the channel. We were buying down here anytime it was below 17. And so we were buying in here, and then it went up, and anyway, it hit. So now I'm looking for a new bottom. Like, yes, we have this big one here, but guess what, guys? Don't look at that. That is Liberation Day. So Liberation Day, and now I'm going to go to a shorter time frame here. Let's just sit. I'm going to head over to the 1 year. So yeah, Liberation Day, back in here, that was Trump and his Liberation Day. That, to me, that's not important. So I am seeing this now here. Like, look at this. We've got a clear kind of bottom in here. So I am kind of at that point right now where I'm thinking if it's under $19, I'm going to start buying now. I was trying to find the bottom before, and I was thinking under 18, and I just never got there. Then I was thinking under 18.50, and I did make a small trade. Not on the 0 to 100K, unfortunately, but I made a small little profit in there. But right now, I think if it goes below 19, I'm in. I am in, because I think up here between 22 and 23, I think that's very reasonable for them to get back to. I think that's very, very reasonable. And I see this as being the bottom, and they will, every so often, I think they're going to go back up to here. So I'm going to be playing these. Now, right now I'm sitting at 19, and I'm going to keep watching this. If If they just don't get back down to 19, I might even have to move it up to 20 bucks and say anytime they're below 20 bucks, I'm going to buy. And that's probably the smart thing to do. I'm not that smart yet, but right now I'm $19 smart. But maybe, or even maybe 19.50 might be a good idea. So I am looking to get into another swing trade on Air Canada because it's one of the more reliable swing trade targets that I've had for sure. And I will say, with some of these past ones, we've actually had some channel members that have actually played some big ones and have done really well on the Air Canada trades. All right. Danielle says, what I love about you and your channel is that you are open to all types of investing and you respect your viewers. Absolutely. I have a rule. I'm going to respect you guys, whether I agree with you or not. That's the thing. I believe in respect, and that to me is a fundamental key thing of the channel. It's like, it's okay if you have a different idea than me. It doesn't mean I'm going to ignore your idea either. Let me just put that out there. I have always approached it that if I have an idea, and somebody comes along with a different idea, I want to at least look at their idea and figure out why they have that idea. And a lot of times, there's many, many times where my idea on the other side of examining their idea has maybe moved a little closer to their idea. So I have seen things shift a little bit, and I'm very open to that. And I think that's my science background because, and Bob will tell you this. With science, a lot of time, what you think is right, you may eventually, an experiment may come along that completely throws out all of the data. Throws out the validity of a theory or of a hypothesis, but that's how we progress. We progress by changing, by coming up. At one point, we used to think the Earth was the center of the universe, and everything revolved around the Earth, the sun, the stars. And as science got better, as technology got better to give us better data, we eventually learned that no, we're not the center of the universe. The sun's the center of the universe. And then, once again, technology got better. The sun's not the center of the universe. We're revolving. We're revolving around, some supermassive black holes in the middle of the Milky Way. So that's the center of the universe. But then, once again, we kind of have learned a lot more. And now we kind of know that there really isn't a specific center of the universe because of the way they believe the universe has expanded out of the Big Bang, that technically kind of everything is the center of the universe because everything's kind of moving in a uniform. So, that idea always is changing. And once again, this is like tangent. I should have called this show the Tangent Show for today. All right. Bob says, true, with technical analysis, you need to keep in mind earnings dates. Otherwise, you can get an earnings surprise and see the stock drop. Yes. So that's a really good point. So when you're looking, so let's say, for example, if you want to do a swing trade, the worst time to possibly do a swing trade is the day before ex-dividend day. So you want to know the ex-dividend date, absolutely, because on ex-dividend day, when that's the day the dividends are declared, or at least they're assigned to who's going to get them. That means that they're also taking account into the market cap. So if you're paying out, let's say with something like Canoe, if it's paying out 10 cents a unit, well, you got to realize you got 10 cents, and then let's say there's 1 million units. Well, that means that they're going to lose, 10% of that million. If they have 1 million outstanding shares, it would be 10% of that. So what's that? $100,000 would instantly come out of their market cap, and because that's all going to dividends. So that could cause a drop, and that's kind of one of those things. So one of the things that is also interesting is if you have a large dividend company that's a quarterly dividend payer, a good entry point might be ex-dividend day because that price has dropped and it's going to recover through the month. So time frame becomes kind of a thing here. Like it won't, it's not like you're going to buy it in the morning on ex-dividend day and it's going to be back up at back up at all-time highs by the afternoon. It can. It absolutely can, but it probably won't. So just something to keep in mind. Oh, I should go big screen every so often. Danielle says, I am style new in investing business and I'm still learning, so I need a channel like yours. Not style, but steel. Or you mean still. There we are. Still. Oh boy. I love it. Yeah, that's I sort of pride myself on being newbie friendly. Newbie friendly. And that's one of those things I always tell new people. Like, come to the live streams, ask your questions. We'll get them done. We'll get them done. All right. Bob says, so how did you learn investing and technical analysis, given that you majored in biochem? I've always been very keen to numbers and patterns. It's actually interesting. Most of my academic early years, so junior high, even from elementary, junior high, I didn't want to be. I wasn't really thinking about science. I was thinking about math. For the longest time, I wanted to be a mathematician because I loved math, numbers, all of that stuff. So I think it sort of became a bit of an easy fit for me. And I know getting out of when I finished university, I did not know a lot about finance. I knew how to do my taxes because I learned how to do taxes very quickly because I did not want to pay somebody else to do my taxes. So yeah, it became kind of a situation where, as I got older, as I started to get older, I started to look a little bit more at technology. And once I did, at finance. And when I decided that it was time to learn, I can learn things quickly. So I basically devoured a whole bunch, a lot of things, from text, even, some reading, some YouTube, a whole bunch of everything, just to get myself up to speed, because that's kind of one of those important things. And I also look at it this way. I'm like, do I know everything? No, I don't. And I'm also I'm probably one of the few YouTubers that if you ask me a question that I don't know the answer to, I'm going to tell you, I don't know. I don't know, but I will go find out because, I don't like not knowing, but I will definitely find out. All right. Talking about pet peeves, you always have an extra explanation for Mr. Math. True enough. You can still style steal. Exclamation mark. Let's see. I mashed the keyboard too quickly. Let's see. I like my math. Let's see. Well, it's your video stream. It is, but at the same time, I'm okay. You're not saying Mr. Math's name right. Not unless you do the big thing, right? Let's see. Moose always uses a lot of clickbait. Yeah, I don't mind clickbait. I will use it, but I have a prerequisite. If I'm not delivering on that clickbait, then I won't use it. I have to deliver. So, and to me, that's technically, I think they call that level 1 clickbait, where as long as you're delivering on it, like I won't put something up that says, World War III declared, and then we read about it and it's just there was some kind of political thing that happened that really doesn't have anything to do with World War III. I won't do that. Not to say any other finance YouTubers would do that. Well, there's one that probably would. I won't mention his name, but I'm sure you guys know who I'm talking about, or some of you might. I will just make sure that, I don't mind the clickbait, but as long as I deliver. That's my final word on clickbait. YouTube kind of works that way, though. I mean, it's kind of one of those things. Like, if you want to get people to look at your video, you kind of have to say something in the title that stops people in the tracks, or the thumbnail. I'm getting better with thumbnails. But at the same time, are they perfect? Nah, not even close, but we're getting there. Muggsy says, so you can't please everyone, Candace. Most of us enjoy your content. Otherwise, we wouldn't be here. Oh, yeah, absolutely. And I always look at it this way. Like, I see the channel is evolving. I mean, and gosh, if you look at early videos, They look nothing like today's videos. Even just recently. Just recently, I changed the blue title screens. I've changed those to green, and I'm liking the green better. And I'm also looking at ways to break it in a little bit different. So you're going to continue to see little improvements here and there. Let's see. Lisa says, "Oh, okay. I know who Dividend Guy is. That's different than the Moose Guy." All right. I do watch Mike from Moose on the Loose, but he is all about single stocks. But I am hybrid ETF, cover calls, and single stocks. I like Kyle also and Adriano. Okay. Well, you'll get a little bit of all of that here. You'll definitely. You know, I look at it. I like to look at the whole. I like to look at the whole picture. Absolutely. All right. Swing that bird around. Well, bird. I mean, if you're looking to do a longer term swing trade, bird construction is not a bad choice. All right, Brian says you are one of the main reasons why I have bought a few ETFs. Please not. I will not hold you responsible for their success or failure. Well, that's fine. I know. I look at like every so often I will get a complaint. I'll get somebody who complains about something I picked from a video 3 years old. And they're like, well, these numbers are wrong. And I'm like, well, those numbers are 3 years ago. And then they never reply after that. I don't know why. I mind you. I mean, sometimes, you don't always look at the date of something. You just click on it, you watch it, and you're like, what's this? This isn't right. It's fine. Dorpat says, Mr. Math is uniquely you. Don't change it because someone doesn't like it. I think you could survey what majority of members like before making huge changes. I can. And Mr. Math, he's not in a lot of videos. Basically, only in deep dives. So, I think I'll find another way. I think I'll find a different way to incorporate Mr. Math. So, and not retire, just change perhaps. Rory, here we go. Rory says, I wonder if Adriano is getting a nice cut from the fund managers he promotes. Even if he does, it doesn't matter because it's very informative info with transparency. I can tell you right now, he's probably getting nothing from having them on. It's more or less he's approached them. What he is getting, of course, is the extra views, people who are tuning in to watch it, for sure. I am looking. I do want to start bringing in some fund managers. I haven't yet, but it is something that's on my longer term horizon. Let's see. Is September expected to be a dip month as usual? Do you think the Fed cutting rate would change that? This is true. We need a minimum 10% correction. Here's the interesting thing. Yeah, September traditionally tends to be a red month, but the markets have not been doing what they should be doing. Like quite literally, everybody and their dog. Like I thought August was going to be a red month at the beginning. I didn't think it was going to. I mean, I was thinking flat, slightly red. That was probably closer to what I had said. But nope, I was absolutely wrong on that going into it. So kind of with September, my gut says, yeah, it should be red. But if I have to call it right now, I'm going to call it flat, slightly green. I'm going to say green, but not much. But we'll see. We'll see. I mean, September does. I mean, a lot of companies will liquidate things to pay taxes. So that is some downward pressure. But so far, everything keeps defying what we all think. So we'll see what happens. Brian says Adriano has some nice interviews. Yeah, he does. He gets some good interviews for sure. Tax loss selling is coming up. Exactly. Ontario was the true center of the universe. Yeah, okay. Isn't Toronto the center of the universe? I think people in Toronto might think that. Well, or at least we think that people in Toronto think that. I have lived in Toronto. I certainly didn't think that when I lived there. All right. If you're in Toronto, you're stuck in traffic. So that's technically why everyone there is making it the center of the universe. Yeah, with Toronto, it was just subway. Everything was subway. I mean, there was no better way to get around, in my opinion. Bob says Amber Kanwar from BNN started a channel too. In the money with Amber. She's pretty good too. Another great collab option. Okay, interesting. I do like BNN, so that would be interesting. Yeah, I haven't figured out yet who the next one is because I was thinking probably October will be our next one, unless somebody falls in my lap pretty quickly. But I'm sort of like I said, I'm kind of trying to go with bigger people. Like I guess my big thing is I'm trying to get people who are bigger than me on the show. But we'll see. Let's see. The GTA is engulfing Hamilton and Kitchener soon. Yeah. Hamilton kind of almost flows into Hamilton as it is. Brian says yes, they will soon need to expand the 401 well past Milton. The 413 bike pass. Let's see. I thought driving the Deerfoot in Calgary was rough. Oh boy. All right, Jeff is in the house. Hi, Candace. First time live stream and only been following for a few weeks, and I love your style of delivery. Just starting this journey and have gone down the rabbit hole with your videos. Oh, well, thank you, Jeff. Yeah, it's one of these things, and Jeff, I encourage, especially if you're new, utilize these live streams. Come in, bring your questions. I'm pretty approachable. Also, ask questions in the comments. I don't mind. I'll tell you how approachable I am. Sometimes I get comments in other languages. I will actually translate the comments so that I can then write a response and then translate it back to their language. I'm a geek like that, but that's fine. All right. Let's see. If and whenever you do fund managers, Eric Nuttall, Energy, Jordan Zingers, Small Caps, Kim Bolton, Tech would be some great guests to have, in my humble opinion. Or it could be in my honest opinion. Could be both. It could be both at the same time if we apply quantum mechanics to to writing or to acronyms. I'm going to go that way. I like that. Hello, Candace. I have held diversified royalty for income for years, and it seems to be holding well over $3. Any thoughts as to whether you think it could reach $4? I love DIV, so diversified royalty. Now, for the longest time, they were between, they were pretty much like mid $2, 250 in that area, maybe up to 275. Now they did buy, oh my gosh, what is it? Chewy Hut, or Chuba Hut. They bought Chuba Hut in the United States, and that has added another income stream to Div, and that's one of the reasons that's pushed them over $3. If they were to do another similar deal, yeah, they could get to $4. I think they'll be stable where they're at, and I think that the dividends are safe, even though you can look at the fundamentals and sometimes the payout ratio. You look at that and you're like, because it's pretty much been over 100% for a long time. But they have been very reliable, so I do like them. I do like them for sure. Will they reach $4, Michael? Not this year. I don't see it happening this year, but it's plausible. It is plausible later, maybe. I would say 2027, if it's going to happen. All right, Eric Nuttall is the Kramer of the Canadian energy space. Also do the opposite of what he does. It's funny, when you first said Kramer, I actually was thinking Seinfeld for a second. I was like, what? Seinfeld? But yeah, okay. I got it, though. I got it. Best monthly dividend REITs in Canada. Well, I'll tell you. Where I'm sitting, and most of my REIT money right now currently sits, and I'll show you. All right. So, RMAX. So this here, it's a Hamilton ETF. All right, so it's a yield maximizer. All right, so they have a high dividend. Their dividend here is 9.809%. So they do use covered calls. But what I like here, and I'll go to the 1 year. So yeah, REITs, of course, REITs have suffered a little bit, but they've been slowly climbing back up. I like that. They have a great dividend. What I like about this one is that this is an interesting one because 50% is Canadian REITs. The other 50% is American REITs. So this is giving you a good North American REIT exposure, and that's one of the reasons I like it. And the income is nice. The income is nice. I'm well on the green on this one thanks to the income. So I look at it this way. Even if it's a slow climb, I'm fine with that. But there's no reason. Like, I think it can easily get back up to 18, maybe even all the way up to $20. But we need to see quite a movement in the REIT sector. I would be surprised to see that level of a recovery this year. But I think there's a lot of potential there. I will just leave it at that. All right, let's see. I don't know. I made a lot of money on Nuvista, EQT, ARC, and MEG, all for Nuttall recommendations. All right, there we go. All right, Doorpat, I'm really torn and conflicted. Do cover call ETFs with high income really beat pure growth ETFs over time? I am talking Yield Max or Harvest ETFs versus QQC and HXQ. All right, I have a long time horizon, but Blossom cover call FOMO. Okay. All right, good question. So when you look at ETFs in general, once you add covered calls, first of all, there's a couple of things you have to look at. You know what? It's time. You guys know. You've given me that excuse. Let's see here. Where is my... I thought I had one up here. Yes, I do. Over here. All right, going into Canva. Attempting to go into Canva. It's loading a white screen, so I will just re-enter the name. All right, let's go to the whiteboard. All right. So a lot of covered call ETFs. You have to look at it. There's a couple of things that I'm going to get to the draw tools. All right, let's just get me a... we'll go with a wide pen. I'm just going to go with black for now. So you have to sort of look at it. Like if this here is your fund, a lot of them will only do covered calls on a part of the fund. So a lot of them might do 33% covered calls. And the rest of it, they're not doing covered calls. Now, why are they not doing covered calls? Because covered calls, you will lose some of that upside potential. So up here, we get full upside potential. So, because these are going to grow normal, whereas they're doing the covered calls on this, and that 33%, they're going to get premiums. Now, with some of these new big ones, they are not really doing 33 anymore. They're now doing 50. So a lot of the new ones are doing like a 50% covered calls on up to 50%. And I say up to because depending on market conditions, if we got into a strong bull market where things are going up like crazy, well, what's going to happen is they might, instead of doing 50%, they might do a little less. Maybe they'll do 25%. But just because they want to cap all of that upside potential. So some, and this is some, not all, but they will do that. They will pull things back. So, and for those of you who are new and you're thinking about covered calls, upside potential, what the heck does that mean? Well, here's the thing. So when you write a covered call, so for example, let's say you have a stock. So on an ETF, they will write covered calls on their individual stocks that are in that. They don't write it on the whole ETF. They write it on the individual holdings. So if your ETF holds, let's just say it holds, we'll say it holds Bird Construction, BDT. All right, so Bird Construction is about, we'll say $24. It's somewhere in that, I think it's a little lower now. I think it's like 21 or something. So let's say they hold it. They will then give somebody an option to buy it. So they'll say, okay, you could buy, and normally they do it in batches. So it might be, I think the smallest batch is, no, and this is where, because I don't do options myself, it could be 100, it might be lower, it might be 50. But let's just say, for example, they're selling it in options of 100. So we'll put 100 down here. That is your options bundle. So a bundle of 100. So they'll say, okay, you can buy our 100 shares at $26 in, we'll say 1 month. Because they'll put a, whoops, MONTH. So they'll put a time and a price. This is called the strike price. So $26. So what's going to happen? They're paying 100. Now they buy this, so they will pay you a premium. I'll just call it a P. Maybe that premium is I don't know. Let's just say it's $1 a share. So if you're paying $1 a share to get the right to buy it at 26, why would you do that, right? Well, if you're bullish on Bird and you're thinking 26 in a month, they're going to be about 27, 28. You might do it because then in 1 month, so after that time is, let's say, for example, let's say they're at 28. So after that month, if they're at 28, the person who bought this is like, all right, I'm buying, I'm picking up those shares at 26. And that's what they're doing. They're getting them for 26. They're only paying 26 for them. You have to give them to them. Now, for you, you're still in. So you got the $1 premium and you got that, you got that. It went up to 28, but they're still giving you 26. So you're still making that other $2. So you're still making $2 a share. So you're making $3. So you've now made $3 for each of those stocks. So in this case here, if it's a bundle of 100, you've made $300. Now, if you had not had that contract and it went up to 28, you would have made $4. So when you look at that ETF growing, there's $1 that's not showing up in there. So that ETF may have grew like that. So instead it might grow like this because of that $1 separation. Now, ideally though, and this is, taking this to another layer, ideally, if your target is 26, let's say it only went to 25. In that scenario, well, they don't get to buy it. You've made that $1 profit. There's your $1. And you still have the stock. You don't have to buy it back. And that there in that case has another $1. So you now made $2. But if you look at those lines, they're the exact same line. There's no difference between the two. So in this case here, you lost that, it capped your upside potential. And the more bullish things go, like imagine if instead of $28, imagine if it went to 30 and you have to sell it, then you've lost $4 for each. In that case there, it gets even a little wider because that potential gets bigger. So that's what they're talking about with covered calls, is that you lose some of that potential that you could have had. And, it's not a great thing. But now let's put the but in there. But what you got to look at is you as a investor, well, that dollar premium that they're giving there, that is all going into your dividends. So that's why dividends get bigger. So when you look at, I'll give you a word here, volatility. All right, so when you look at volatility, well, volatility becomes the key measure. So basically, volatility, I'll even say it, it powers ETFs, covered call ETFs. Because if you have a stock that moves a lot, so if this is your stock, like this, so a stock like this, that's not a lot of volatility. You're not going to get big premiums on that. But if you have a stock that moves like this, that's a lot of volatility. That price moves a lot. People are going to be more inclined to buy your contracts and they'll pay more for them. So you'll get bigger contracts. And if that contract is going into the, if that contract is going into the dividends right here, then the more volatility, the better it is. So when you look at an ETF that's doing covered calls, remember that beta value, that beta. So beta And, I always talk about beta. So beta is a measure of volatility. So if you have a beta of 1, that means that company is exactly as volatile as the market average. If you have a volatility of 2 or a beta of 2, it means you're twice as volatile as the market average. And covered call ETFs will love you. If you have a lower beta, let's say you have a beta down around 0.5, you're not going to get many premiums for it. So that's one of the things that you'll see. And technology tends to have pretty high betas. So that is kind of a thing that makes them very attractive to covered call ETFs. So anyway, there was our whiteboard moment. And I know it's a little further down. Bob was asking if you were drawing with your mouse. I am drawing with my mouse. I need like a Wacom tablet or something to draw with. But no, I'm getting better with drawing with the mouse. All right. Bob says BRKY has outperformed BRK in my calculation. Interesting. Yeah, there are some times when it does happen. Now, the next video coming out, so Tuesday or tomorrow, if you are a channel member, I'm bringing an ETF, and I won't tell you which one, but I'll tell you I'm bringing a covered call ETF into the mix with the banks to see where it stacks up, and it might surprise you. It'll be interesting. I'm putting it out there. Let's see. BRKY uses covered calls and 1.25 leverage. So that helps a lot. Covered calls are written on 50%. Yeah, exactly. So when you add the leverage to it, and especially in a bull run, that leverage means that, for every dollar, you are, it's like you're investing $1.25. So in this example here, yeah, let's pull this down. There we go. In this example here, where we got where we're getting a premium dollar, and then we got $2 on that exchange. Well, if we also had leverage in there, that would also be an extra quarter that would be throwing in. So we get extra money. So the leverage gives you more money in the return. Thus, this space gets a lot shorter. In fact, if you have a covered call and leverage, and I'm going to add one more thing. I'm going to put it in here, DRIP. In other words, if you reinvest, so DRIP stands for Dividend Reinvestment Plan. If you reinvest those dividends back into it, you will be really, really, really close. In fact, in most cases, you'll probably be within a standard deviation of the underlying asset, depending on what it is. Now, this is, of course, in a bull market. Bull, B-U-L-L, there we go, bull market. So if you're in a bull market, yes. Now, the rules change if you're in a sideways market, or if you're in a mild bear market. So if the market is kind of just moving flat or maybe slightly to the downside, your covered calls, you're probably not losing any upside potential. So you've just got income coming in and things are kind of maintaining flat. So in this case here, the underlying assets, they're not going up, they're just flat. Whereas you're still getting all of your premiums and your covered calls. So that is providing you with income. So in this case, you're going to make a little bit more. And if it's going down, depending on how speed, if it's going down, you could either be going flat because of the covered calls, or you might even actually be still going up. If you're going down big time, well, the covered call and leverage, you're still going down, but you're still gonna have that extra income, and that's always a nice thing. So in a strong bear market, if you have those income stocks, it's nice because as you're watching it read over and over and over again, and you're watching my videos, and I'm like, this one only lost this much compared to this one. Look how much this one lost. Well, yeah, then you're kind of like, all right, this is cool. I'm at least getting some money popping into my account, or I'm getting those emails in the morning saying, you've received a dividend. That's always fun, and it can actually psychologically, it can make things a little bit easier to swallow. So, it's a fun thing. All right. Let's see. MSFY also performed MSFT last year, I think because MSFT was trading sideways until it broke out early this year. Yeah, the sideways part. That's exactly what I was talking about. Rory says, Bob, I suppose he darts the bullseye a few times. I hope Eric is right about the U.S. shale, which makes me bullish on Canadian oil. He sold his Baytex position where I may buy it. Yeah, I do like Baytex. Brian says, I use the high income to buy various ETFs that I would not otherwise never get a chance to buy. I'm not able to add anything besides my OAS for investing. Right, exactly. Yeah, and that's the thing. I mean, a lot of times, and that's one of the reasons, like the 0 to 100K challenge, I've got a budget on it. So pretty much, basically $500 base amount a month, plus whatever you guys generate through, super thanks, super chats. Also gifted memberships. I'm going to count gifted memberships, and anytime you do an affiliate link, that'll all get counted in that. But it keeps it limited, and also really, I guess it kind of drags the series out. Like, when I first started, somebody's like, it's going to take you 10 years. And I'm like, no, it's not going to take 10 years. It's going to take a long time. But not 10 years. I hope. Let's see. Rory says, Baytex, Birchcliff Energy are possible takeover positions should oil recession hit hard. Yeah, I would agree. I would absolutely agree. That's what happens when oil does get into a kind of struggle. A lot of the big boys, they will eat up the smaller companies, and we already seen that with Meg. Actually, I think I got I actually have a story on Meg. It's like, yeah, we're so far behind though. Let's see here. Brian says dividends make it possible to buy more dividend ETFs to eventually help fund my retirement. Fair enough. Covered call yield is basically directly proportional to beta plus VIX. Exactly. Yeah, and I, believe it or not, I've actually got a video on the channel on the VIX. I don't think anybody watched it, but it's there. It's from quite a while ago. Are you drawing? Yeah, and I was, once again, drawing with my mouse. The thing I am worried is ROC on my non-registered covered call. I understand it reduces your cost on a yearly basis, and you pay capital gains only when you sell. If I keep that CC for a long time, I will be taxed a lot. I mean, you got to look at it from the price perspective. One, if you've got a covered call ETF that's designed for income, that does use a lot of return of capital, a lot of times those are also ones that don't have a huge amount of value. So yes, you will be going down. Like your adjusted cost base will go down when there's return of capital. Yeah, that absolutely is true. When you sell it, yes, you will get hit with capital gains at one point in your non-registered. Like I always will still say, if you have room in your TFSA, why put anything in your non-registered when it comes to income generation? Because ideally, when you retire, what I would like to see, and what I think most people would like to see, is a nice healthy income stream coming out of your TFSA tax-free. And that becomes huge because it doesn't affect support. So if, for example, if you've got OAS, that does not count towards your clawback. If you don't have a lot of income and you got GIS at the same time as well, that doesn't affect that as well. So you could have a really nice lifestyle. Like if you've been working on that TFSA and getting it, if you've got it nice, maxed out, full of income, oh boy, that could be nice. It could be a very nice thing for you in retirement. But yeah, if it is in a non-registered and you sell, yeah, there will be some capital gains there. And there's different ways to handle that. One thing that you can do is there's always tax loss harvesting. So tax loss harvesting is when you sell something at purpose on a loss. So that way there you can balance off. So let's say, for example, you had your covered call in your ETF and it had a big capital gain because you're like, I'm finally selling it. It's gonna have a big capital gain. Well, if you have something in your portfolio that is currently in the basement, but you could sell it, take that loss on purpose. But I'm not saying just take that loss, just because that kind of doesn't make sense to me. But if you've got a sideways movement that you could make, so for example, let's say, and I'll switch colors because we're not talking about the other thing anymore. Let's say, for example, the banks are down at that time, and BNS, let's say BNS is down 15%. So if BNS is in the red in your portfolio by 15%, you could sell. You get a capital loss that could then offset your capital gain. And what I would then do is, if BNS is down 15%, there's a good chance other banks are down 15%. You could move it to Royal Bank, for example. Maybe Royal Bank is down 15% as well. So in this case, what you've done is you've pulled out that capital loss. It's now being able to use it on your covered call, and you have then transferred that to Royal Bank. Now, before anyone says it, all you've done is, you have now taken this ACB, and you have effectively lowered it to this ACB. So you're taking the capital gains from the covered call that you're selling, and you've bundled them now into Royal Bank. They're basically moved into Royal Bank. So eventually, someday down the road, if you decide to sell Royal Bank, you're gonna have the same problem. It's gonna come back up again. So it's one of those things that keeps happening. It's shuffling, and I don't know if your overall goal is, let's just keep shuffling until I shuffle my mortal coil. Maybe that's your goal. I don't know, but it is one of those things that you can do to shuffle. I mean, eventually, in the end, the tax man always gets his day. But you can certainly move things out of his grasp for a long time, for sure. Bob says, I'd be surprised if ZWB Banks covered calls outperforming ZEB. I would think in that case, I think I feel like I did this recently, but I'm pretty sure ZEB might beat ZWB for sure. Put as much as you can in the TFSA and second RRSP to save your taxes. Let's see. Do you have a full-time job with YouTube being a side hustle? Like, what do you do for work? Basically, so I put full-time hours into YouTube. I don't make a lot of money, I will tell you. I do not, like right now, this month, so for August, I'm looking to make just over $500 on YouTube. That's all. That's it. What I do is I do a lot of trading on the side, and that is where I make up the rest of the income. So right now, trading is kind of everything. But my goal is to eventually get to a point where YouTube supports me that I don't have to trade. I'll still trade though, but I won't have to trade. As a, hey, if you want to pay the rent, you got to trade type thing. Brian, in reality, the government loves you buying RRSPs. Invest $400K over your lifetime. Cash out at $2 million. Thanks for the $1.6 million free tax money to the government compared to your TFSA. Yeah, no, the government loves that. So if you have room, and quite literally, if you have a TFSA that's mostly empty, that's where your money should be going. So when it comes to priority, let's do this again. All right, I'm gonna go with. We're changing topic again. We'll go with blue. All right. So when it comes to investing priority, so RRSP is at the top, but we're talking about matching. So for example, if your job will match your RRSP contribution, it's usually up to a limit. So if you've got RRSP matching at your job, yeah, make sure you hit that limit to get that free money. So that becomes the top of it. Now, after that, pretty much it falls into TFSA. And we're not going to talk about other things like our DSPs or some of these other ones, but in a nutshell, TFSA is technically the king outside of that matching. The only other exception is if you do have a really high dividend US stock or US ETF, you might want to put that into your RRSP for the simple reason that in your TFSA, you're going to lose 15% withholding tax. And that's just, it's just never going to do anything. It's gone. It's gone. You can't do anything about it. Now, in your non-registered, you can apply for a foreign tax credit. Because the whole thing is, this is what all of these tax credits and these tax rules, it all boils down to one thing. Nobody likes double. Whoops. Let's, there we go. I almost missed my do. D-O-U-B-L-E. All right. Nobody likes double taxes. So this is why things work the way they do. So in your TFSA, there's no taxes. The government charges you no taxes. So the IRS looks at it and says, oh, there's no taxes. So we can tax. So there is one tax right there. So that there is TFSA. When you look at the RRSP, there we go. The CRA is taxing you. There is your one tax. So when the IRS looks at that, they're like, "Oh, you're already being taxed once, so we're not going to tax you. So you don't get taxed because you're still getting taxed once." And in your non-registered, so I'll call it cash. We'll just call it your cash, your non-registered account. Well, in this case here, the CRA taxes you. The IRS taxes you. Well, that would be two taxes. But for that reason, there is a foreign tax credit. So that way there, to alleviate that. So in this case here, the CRA, with their foreign tax credit, is giving you a way to knock that back down to one tax. So it's all about one. The power of one. They just want you to get taxed once. So anyway, all right. Bob says crypto covered call ETFs are a good life hack if you can stomach the risk. Yeah, absolutely. Right now, one of the top performing things in the challenge is a fund called HBTE. Now, it's not technically, it's basically the Bitcoin leaders ETF. So it does use covered calls, for example, and I believe there's leverage on it as well. It invests in all of the big players in Bitcoin. So you got everybody from miners, so companies like Hut. You've got Strategy, obviously. You've also got things like digital assets and things like that, and also Bitcoin ETFs. I'm sure there's plenty of those in there too. So it's giving you that full exposure. Now right now I'm using that one. I will probably when I think Bitcoin is starting to retreat and we're heading towards a crypto winter, I'll probably move out of that one. And quite honestly, I'll probably move it back to a straight ETF, covered call ETF like BTCY. I'll probably move it all back there. But right now, I do think we still have another run with Bitcoin. Brian says, when it comes to cover call ETFs, that is why I look at share price, because if you have one at $30 and pays 15 cents or a $10 one paying 10 cents, you can buy three and get 30 instead of one and get 15 for the money. Yeah, well, if you look at yield will give you the same value because it's relative to the share price. So, but yeah, it's a good idea. It's a good idea. There we go. Bob says, Brian, just look at the dividend yield. Let's see. Should I sell my Meg shares or hold out? Let me answer that in a moment because we have a news story on that and I have the data in there. But basically, there's an agreed buyout price. If it's above that, I would sell. If it, if you want to. But keep in mind, this deal's not a done deal yet, and I'll explain that here in just a moment. I know I need to get caught. All right, you know what? Right now, let me just get to the next news story because honestly, at this rate, we might be here till Christmas. And the next story, let me just get you over here. Actually, the next story is that story. So that's a perfect question to lead us into the Meg Energy. So Cenovus wants to buy Meg Energy. So the Canadian oil patch, it just got itself. This could be a blockbuster deal. So Cenovus is trying to snap up Meg Energy it's a $7.9 billion takeover. But the drama is not over yet. There is another player on the board, and it's Strathcona. They're basically saying that this bid by Cenovus is more of a take under, and they're accusing Meg's board of weakness because of it. So here's the general idea of the deal. So Cenovus Energy, they, like I said, they announced $7.9 billion cash and stock deal to buy Meg Energy. Shareholders are expected to vote in October, and they do need 2/3 approval. So they need that 2/3. Now, Meg investors are then given an option. They can choose $27.25 in cash, or so that's that number. If it's over $27.25, I would highly consider selling it personally. Or the other option is that they can receive 1.325 Cenovus shares per Meg share. So that is going to be the remuneration, sort of the remuneration. That's going to be your reward if you decide to keep. Now, Cenovus and Meg's oil sands assets right now, they actually sit side by side out at a place called Christina Lake. That actually makes this kind of a perfect merger. So there would be amazing cost savings between both companies. So 150 million annually in 2026 to 2027. That would ramp up to about 400 million once we get to 2028 and onward. They both specialize in SAG, so SAGD technology. And if you're curious about SAG, that's actually steam-assisted gravity drainage. It's a method used with the oil sands to get bitumen, which is basically a very thick, heavy form of crude oil, out of the ground without open pit mining. So it's kind of cool. It's kind of cool. But yeah, a lot of people don't. If I say sagged, I'm like, a lot of people aren't going to know what that is. So Meg shares, obviously, they responded well. They actually closed at $27.56, so higher than that effective offer value. So this is kind of where it's like, and especially if my adjusted cost base is much lower, I would be very tempted. And now analysts are saying that the Cenovus offer is pretty cash heavy, and that the longer term synergies are pretty much why they're going to probably go with that one. But Strathcona they've also got a bid going. And they're also, they're offering they're offering to try to stop the other bid because they own 9.2% of Meg's shares, and they're going to vote against it. So we'll have to see how this all turns out. I think they're still going to pull it off. I still think this is going to move forward, and this is really a good deal. So it could reshape Canada's oil sands and the whole landscape. So if Cenovus wins, it consolidates Christina Lake, it drives down costs, and it strengthens its position as a low-cost SAGD, steam-assisted gravity drainage producer. It could be very bullish for long-term shareholders. So that's the other option too. If it is going ahead, maybe you want to keep those shares. Maybe you want these new Cenovus shares because it could be good for them. However, if Strathcona does manage to sway investors, it could actually result in higher near-term payouts for energy investors. Basically, it's kind of that battle. It's immediate value versus long-term strategic gain, and the next month or so, we're going to probably see a lot of movement in both shares as a result. So what can I say? All right. There we go. We finally got through. We finally got through a couple here. I'm still really far behind though. Yeah, exactly. So, all right. Brian says, let's get out of the news for a second. Yep, that is why I keep stacking TSLY last few months. It's paying like a 40% yield, and I cannot find anything making more sense to put money into right now. TSLY Harvest, that is not the US one. Yeah, exactly. Isn't the US one, is that the one, is that the YTSL one? I'm trying to think. Jordan says, Bahaha, the wife has gone to bingo tonight. I am left unattended. What shall we get into tonight? Don't get into too much trouble, Jordan. Because remember, you always have to live up. You always have to live up for it. Kelly says, does reinvesting your cover call dividends or premiums, I'm just learning the jargon, use up room in your TFSA? No, because they're already in your TFSA. So when you receive, so let's say, well, I'll give you an example. Let's go back to the whiteboard. I love the whiteboard. All right, so if your TFSA, I'm just going to say, let's just say the room is 100, and it's not $100. Let's just say you have a TFSA of 100, and you receive $1 in dividends. So that's 101 in there. Well, that is your TFSA. Now, if your contribution room, so let's say in this case you had 100 still of contribution room. Well, you got 101. You still have 100 in contribution room. So anything that grows in your TFSA, it grows. Like you could grow your TFSA to like 1,000 in this scenario, and you would still have your 100 out here, no problem. That's the thing. Now, here's the danger though, is if you get something really shoddy, let's say this stock falls in value opposed to it. So if that 100 fell to 99, well, you still have your 100, but you've only got 99 in there. So you have a maximum of 199 then if you were to do it. So that's kind of that thing. You don't want to put stinkers in your TFSA because you don't want that to shrink. And that's why you also don't want, if you've got fundamentally sound stocks in your TFSA and they're down, you don't want to sell. You don't want to realize that loss because you also realized shrinkage. Now, here's another thing that people don't realize. So let's say, I'm going to come down. I want a fresh square. So let's say, once again, you have your TFSA of 100, and let's say it makes $1 a month. So by the end of the year, you have $112, but you're an income investor. You live off of that $12, or that just 12. We'll just call it 12 units. So at the end of the month, or the end of the year, you have your 100, but you've taken out the $12 because, or the 12 units. You've taken out the 12 because you're living off of the 12. Well, and we'll say that this is maxed. Let's just, in this example, we're maxed, okay? So we have used up all of our contribution room. We got our 100, we pulled our income out. Well, of course, every January you get, we'll say in this case here, let's say in January you get 1 extra unit. So in January, you think, oh, well, okay, I get 1 extra unit, so I have 101. Well, I have 100 in there, that means I have 1 to play with. Well, no, you actually have 13 to play with because anything you pull out of your TFSA, it goes back in. You get that space back in January with that 1. So you'll get 1 plus the 12 that you took out. So as an income investor, and this is in retirement too, let's use some real numbers. Let's say, for example, your TFSA is, we're going to say 95,000. So you get 95,000 in your TFSA, and let's say you monthly have, we'll say 500. You know what? Let's make the math easy. All right, you have let's say you have $1,000 coming out a month. So that will translate to $12,000 a year. All right, so next January comes along, and this year you're pulling that $12,000 out. Next January comes along, you've got your $95,000 still sitting in your TFSA. All right, government gives you another $7,000. Woohoo! So that would be, well, you look at that, you're saying that's like $102,000. All right, there we go. Make that more of a thing. So you have $102,000, but that $12,000 comes back in. You get that back too. So your total space now, is in this case here for 114,000, meaning that 95,000 that you have in there, and we'll put that in the box like we've been doing before. Well, that means you've got the 12,000, you've got that 7,000, so you got 19,000 more that you can add to it. So that's kind of one of those things. Now, some people, what they will do, and this can make a lot of sense. Let's say you've got your RRSP on the side. Well, if that's, you could conceivably, now it is a taxable event. You could take from your RRSP, you could take that 19,000 and drop it in there, and that would max it back out again. And then you're going to get, you'll be able to put more into your income ETFs, and you'll have a bigger income. So instead of 1,000 a month, maybe you're going to be at, 1,085 or something, or maybe you're going to be at, maybe even 1,100. But you have, in this case here, you have created, in that scenario, you've created $19,000 in income, because you would be charged that as income. Now, keep in mind, if you have, if you have no income, well, you're probably still going to have, though, like OAS and a few other things, but you would have to take that tax hit on that. Now, as long as, and this is a situation, if you're on GIS, you may not want to do it because that would seriously hurt your GIS. But if you just have OAS and that won't cause clawback, well, taking that tax hit might make sense when you consider how much extra tax-free you're going to be getting from the new things that you added. But you always want to do the math, break down the different scenarios. But that's definitely one of those things. Or if you don't want to take it from your RRSP and you have ample between your Canada pension and your OAS, if you've got extra money in that, you could always shift some of that in there to get that up higher and create more of that income. Or in that case, you could always just, there's different ways that you could certainly do it. But going back to your question, if you're reinvesting dividends that have created in your TFSA and they've never left your TFSA, they do not impact your contribution room in any way, shape, or form. All right. Bob says, are you still on the red in total return on TSLY through a year? You are still on the red in a total return on TSLY through on a yearly basis. Now, I don't know if that is with the total return, but it might be. Tesla has fallen quite a bit this year. Brian, yes, if you had bought it at its height, sure. But if you bought and your average is 677, then you are still in the money, and it's Tesla, it will go up again. Yeah, Tesla does do that, for sure. Brian, no, Kelly. All right, that was answering my question. Oh, I see something fun up ahead here. We'll get there in just a second. You are able to get meaningful trading income without options and leverage. Yeah, it's swing trading. It is swing trading, and like I mentioned before, I am showing a lot of those swing trades to the channel members. So the channel members, they're able to see some of those. But yeah, that's what I'm doing. All right, and we got a super chat in here from Scratch. Just a small contribution to help you pay the bills for your channel. Thank you, Candace. Oh, thank you, Scratch. And guys, that means Scratch is our goat. Scratch is now the goat of the stream. Thank you, Scratch. Always appreciate you. All right, let's see here. Where were we at? Oh, we're still, oh boy. Doorpat says, this strategy doesn't work for everybody. For families with little kids, taxable income affects how much CCB you get. So I play with my RRSP, FHSA a lot, need to stay below a specific taxable income level. Yeah, and that's the thing. You may not like math, but make math your friend, because if if you play the math out, you'll save yourself some trouble. You don't want to sort of guess. You don't want to guess and then at tax time find out, whoops. You want to do the math for sure. And honestly, if you're not good with math, I can't say learn, but in a case like that, you might even want to bring in a professional, like an accountant or something, just to make sure that you're not going to have a surprise at the end of the year. What is the level? What is that income level? All right, that was the door pat. All right. Bob, Meg Energy Fiasco is such a poop show between Strathcona, Synovus, and 9 Point. Nuttall said he will vote against an acquisition. He is 10%, but now Strathcona has bought 5% more stock. Absolute drama. Yeah, you see, and that's the thing. If Strathcona does continue to buy more, this could get very interesting. Oh boy. Yeah, it could get definitely very, very interesting. And Bob is saying Strathcona tried a hostile takeover, but then Meg put itself for sale and Synovus made an offer. Yeah, I mean, yeah, it could get very, very interesting before we're done. We'll know in October. I have a feeling this will be a new story in a future episode. Not on Thanksgiving weekend though, because as you guys know, my mom will be here and I will not have a stream that one Sunday. All right, Scratch says the Meg assets as way more leverage alone than being part of Synovus. Ah, all right. Um, let's see here. Greetings, friends. It is not silver or gold, then it is a lemon. There we go. Well, guys, all that glitters is apparently wet lemon juice. Burgers. Larry is in the house. Dang, surprise, still on. What y'all up to? I know. Oh my god. I cannot believe how late it is. All right. I gotta get to some more news, guys. Um, we're almost done. All right, I'm gonna just pile through the news and then we'll get through the rest of these comments. So let's let's do this. Let's do this. All right, as I mentioned before, Canada is set to go big on ports. And I mean really big.
I'm
So
not
this
quite sure how to help you with that.
thank you, Alexa. This week, Carney claimed that new investments worth $500 billion are coming, and they could open a floodgates for a liquefied natural gas exports and critical minerals to Europe. So, what exactly is going on? So, Carney was in Berlin, and he was speaking. Uh, he was speaking in Berlin. He said that Ottawa will unveil major port infrastructure investments within the next 2 weeks. He's talking about two things. So, expansion of the Port of Montreal and development of a new port at Churchill, Manitoba. And we covered that recently. So, the government is unleashing $500 billion in energy and port infrastructure, including AI driven intelligence systems. So, that's kind of a new one. It's framed as part of Canada's nation building projects under Bill C5. So, the new project approval office set to launch by Labor Day. Now, the Port of Montreal, they're looking at this as being their main hub to get stuff to Europe. So that's kind of the big thing there. So it's going to be critical to trade. The Port of Churchill is currently underused, and it could handle, they're saying, agricultural products, critical minerals, as well as LNG. So we'll see. We'll see. And now the Churchill project is backed by provinces, First Nations, and private proponents with interest as well from German buyers. That makes sense. Germany has had a lot of, I know Germany is also interested in the green hydrogen project in Newfoundland. So Carney says there's enormous LNG opportunities alongside hydrogen and critical minerals. Our energy minister, so Tim Hodgins, said that Germans are eager for Canadian liquid natural gas. Canadian proponents think shipments could start within 5 years. Well, that would be good. I'd like to see that, but I'd like to see that. I'd love to see that number be like lower, like 4. So this stance does mark a shift from the former leaders' skepticism on the whole thing. So basically, we're talking about Trudeau. I don't want to mention Trudeau. I don't want to talk about Trudeau. So currently, Canada has one LNG export terminal. It's operating. It's in Kitimat, BC. And they began shipping, well, not that long ago, like June. Like last June, we began shipping. There are 6 more projects that are in development. And as I mentioned before, Canada and Germany have been signing a lot of deals in regards to critical minerals, hydrogen, green hydrogen, all of that fun stuff. So this could be very interesting. I want to see what happens. I'm hoping that this does get off the ground. It's not everything I want. I still want our west east pipeline, but at least this opens up a little bit of exporting of some of our our minerals, our liquid natural gas. What can I say? All right, that let's jump to the next story. We got all right, we'll pull up this one. So the retaliatory tariffs. Um, it is kind of good news for Canadian shoppers. So some items like OJ, peanut butter, and even your jeans may be a little bit cheaper now that Carney has lifted those retaliatory tariffs on U.S. goods. So there is some relief at the checkout. But I know the conservatives are not happy. They're saying, what happened to elbows up? It's like no elbows now. But we'll see. I mean, the thing is Ottawa is removing the retaliatory tariffs that are covered under CUSMA, so CUSMA, the Canadian U.S. Mexico Agreement. And it makes sense because here's the thing. The United States is not charging us any tariffs on anything covered under that, but yet we were retaliating using items that are covered under that. So that I could almost see Trump using that as an excuse to sort of say, well, we're going to start charging you tariffs on the CUSMA stuff because you're hitting us with the CUSMA tariffs. So in a way, I kind of think we should never have been charging retaliatory tariffs on anything under that agreement as long as the U.S. is honoring that agreement. So I think it's a good move. I think that part is a good move. Now, this change, of course, comes after Carney and Trump have been having more trade talks. But I know since I wrote up this, there's been a little bit more strain, but at least things are moving in some direction. Nobody really knows what direction, but we'll have to see. Now, the retaliatory tariffs that are on things like auto, steel, and aluminum, those will remain in place because the U.S. has tariffs on us. So we're going to keep those up. They're going to be matched. So what type of things? Here's a list of what's going to be getting cheaper. Orange juice, peanut butter, craft beer, ketchup, coffee pods, refrigerators, washing machines, microwaves, lawnmowers, jeans, running shoes, bicycles, cosmetics, toothpaste, paper towels, bed sheets. And those are just a few. But, it'll be anything that knocks prices down. I'll definitely be happy. Now, the Canadian Federation of Independent Businesses said that these tariffs have been hurting some of the small businesses pretty badly, and that's true. 58% of small businesses reported being hurt by the retaliatory tariffs, and 67% said they had to pay the full tariff costs themselves. So a lot of them are not passing on the price to the consumer, and that's hurting them. In fact, 38% of those warned they could close within a year if the dispute drags on. So hopefully we get some more resolution for it. But cheaper consumer goods, they will absolutely help ease inflationary pressure, and maybe that's enough to get the Bank of Canada off the sidelines and see if we can get ourselves another rate cut. We'll have to see. We will have to see. All right, one last story. I know I'm flying through these. I like to have a little fun story at the end if I can. Lego. So Lego is, this time, they're still building, but this time they're building profits. And they are hitting some record sales. And a lot of it is all about branding. So one of the things that Lego's been doing right is they've been tying into a lot of major IPs, brands. So things like Formula One, Jurassic Park, Fortnite. These are some of the new brands that they've been making a lot of money off of because people are buying up these. They're buying up these new Lego sets. So the first half, their sales hit a record of $34.6 billion, which is it's crazy. But it's basically a 12% growth, outpacing the global toy market, which has had a 7% growth. So they're almost doubling what the regular toy market is doing. And as we said, it is all about brand. Some of these top brands, they've also got, some of the other big brands they have are like Star Wars, Harry Potter. They've got some upcoming ones as well, Bluey, One Piece, and Pokemon that are going to be coming to Lego. And these brands are really helping Lego get some global reach. So they're getting growth in all markets, even China, where Lego has traditionally struggled. US sales, they grew at double digits despite the tariffs. Lego launched a record 314 new sets, excuse me, in the first half of 2025. Now, their operating profit is up. Um, this is really, really cool. Now, why does this matter? And it might not, because Lego was privately owned. Actually, the owners of Lego, they refused to IPO because they're afraid of losing control of the company. So they are currently privately owned. But what this does demonstrate, and I think this is just a really cool lesson, is that the value of brand partnerships and premium consumer products can go a long way, even in tougher economic periods. So this here is definitely an example of a consumer brand with strong licensing deals, because when a company can sell both a Ferrari F1 car and a Jurassic Park T-Rex in plastic brick form, it's proving that brand power is the real building block of growth. So when you're looking at companies, this is just something. If you see some brand deals coming in with some of your favorite companies, you might want to take a second look. So that's the news. Coming up this week, both Canada and the US, we got one thing on the calendar, and that is our jobs data dropping on Friday. So we'll have to see what that's looking like. Earnings-wise, Couche-Tard in Canada is going to be dropping their earnings. Down in the US, we got Broadcom, we got Salesforce, we got Lululemon. Basically, not a lot. Well, it's a short week because of the Labor Day long weekend. And that, folks, that is the news. Now it's just you guys. And I'm behind. So let's get caught up. All right, we'll get rid of the Lego. All right, Joe Smith says Ontario and Quebec majorly responsible. Larry says, are companies considered people in Canada like here? And if so, do they use their freedom of speech via cash? I don't think, I've never heard of people being sort of treated as company, as people here. So no, I don't think so. I could be wrong, but I don't think so. Scratch says, LOL, the goat. I know. Michael says, last September was the markets down that month? Last September, yes, I believe we did have a red month. Rory, C&Q and Suncor are too quiet. Yeah. Now, I do love Suncor. Bob, what's your trading capital? Oh, you want to know all my secrets? I do have a trading fund. It's enough to keep things going. I will put it at that. I'm not going to reveal the exact amount, but maybe to the channel members, maybe to the channel. Yeah, the channel members, maybe. Like, how much money do you use for trading? Yeah, that's exactly it. The channel members can actually see the exact dollars and cents of each trade, like how much went in, how much comes out, and the exact profit. So that is one of the things that the channel members do get their hands on for sure. Larry says, have you watched the Alien TV series on Hulu? I have. It's actually because Disney Plus Disney bought Hulu. So it's now on Disney Plus. So I have been watching it. I'm actually kind of liking it. I'm kind of into it. Yeah, it's not bad. Scratch, 2 insider buying shares of Cardinal Energy for those who look for a strong monthly dividend payers. Yeah, that's also not a bad one as well. Larry says, Enbridge owns the only natural gas port to Europe. I'm wondering who will control the new one. That'll be interesting. That I don't know, but that'll be very interesting. So we're trucking the oil by rail to Montreal then? Good question. Right now, I would say yes at this point, unless we get once again, pipeline. Come on. We really need, I think the government really needs to give Alberta that pipeline. I mean, appease Danielle Smith. We can't continue to kind of ignore the needs of the West. I think we need to integrate those needs into Canada. Western needs are Canadian needs. That's the way it needs to be. All right. Bob says, I'm able to get decent returns with swing trading, but I feel like I can't get meaningful income without using leverage or options or going all in on one trade. Do you play concentrated bets? So yeah, when that's the thing. The more capital that you have to swing trade, the easier it is. Simple as that. Because let's say for example, all right, let's use an example here. So let's say you have a stock, and that stock is $10. So you have a $10 stock that you want to do a swing trade on, and let's say you can buy 1,000 shares. Well, here's the interesting thing. If you can afford 1,000 shares of a $10 stock, so basically you're looking at $10,000 every time that stock goes up. So that stock goes to $10.01. All right. Now, and keep in mind, I'm talking about if you can sell it at 10.01 and you bought it at $10. Well, in this case here, what that translates is that you have just made, well, take 0.01, move this over 2 spots, and you've made $10. Simple as that. So that's just that. So if you were playing that stock, let's say, the $10, and let's say it went to $10.10, you made $100. Let's say you were playing it on an earnings, that $10 stock went to $11. Well, you made $1,000. That's the power of having a little bit. Now, in some cases, some people will use margin because they're like, okay, well, I don't have $10,000 to spend on that $10 stock. If you don't have $10,000, some people may, use margin to make it, make a bigger play than what they actually have. And that's fine, except for the one problem with that is, if things don't go well, and then they decide to call, if they do a margin call on you, that could get bad. So I tend to avoid margin personally. And, you could go bigger than this, but I wouldn't. So if I had, let's say, for example, if I had $100,000 that I was using for swing trading, well, what I would be more inclined to do is make a lot of smaller trades. So for example, if I made this trade and it's fundamental, let's say this company $10 fundamentals are great, but it goes down. Well, I have 2 options. One, I can take a loss, so I could have an exit strategy for a loss. Or if it's fundamentally sound and I know it's coming back up, then I might just leave that trade open, leave that trade going, and I've still got 90,000 that I'm playing with, so I might have 9 other trades so that I can wait. But it really depends on the market. Now, if it's a situation where, like, I would never do a swing trade on a company that has completely faulty fundamentals because too risky. I don't want to have to put in like a stop loss, and I don't want to have to sort of say, okay, well, I'll take a small loss on this. If I have the space and I don't mind. Now, mind you, if everything is starting to go down, then choices get a little bit different at that point. So what can I say? All right, I got to move a little faster here. we're almost at 3 hours, folks. What do you think about MMY.V? Let me take a quick look at it for you. All right. MMY, here we go. Monument Mining Limited. Once again, in with a penny stock. Now that looks like some good movement here. So they've been moving in the right direction. I do like that. What are they mining? Are they mining gold? Let's see. Yes. They operate the Selinsing Gold Mine in Malaysia and the Advanced Gold Project in Western Australia. Okay. They got 2 projects. I like that. Diversification a little bit. So if something goes wrong, for example, in Malaysia, they've still got, they potentially have their Australia income flow. Let's go into the back end on this. All right. No, this is solid. Their return on equity, 18.01%. It looks like they've got no debt. So yeah, I like their fundamentals. They are a penny stock though. And you guys know I'm leery on penny stocks, but if you are going to get into a penny stock, these are the type of fundamentals I would want to see on them. So yeah, maybe. I know right now there is a lot of good gold plays. Like, of course, my big gold play in the 0 to 100 challenge is London Gold. So let me just pull that up here, LUG. And yeah, and of course on Friday they were up a bit. I'll just pull up the 3-year on London Gold. Here's London Gold. Now this is not a penny stock, but they are doing fantastic. So right now, a new all-time highs, 84.45. And I think in the challenge I'm up like 60% on this investment. It's crazy. And considering I did average up the last time I bought some. So the fact that I'm back up in the highs again, looking pretty good. In fact, it might even win the GOAT of the challenge. I'm not sure. I haven't scripted the challenge yet. Today I scripted the bank stuff. The 0 to 100K challenge will be coming out on Friday, by the way. Yes, Lego is a private. Oh, banana bread. I was trying to show. This is London Gold, by the way. Yeah, hilarious. I didn't have it up. Pathfinder. Also, what do you think about the cannabis sector? I'm just not. I'm not really sold on the cannabis sector. Initially, and I think a lot of people back in the early pandemic thought, okay, cannabis is legal, it's probably going to make a lot of money, but it just didn't. A lot of people got stuck in things like Weed MD and a few others. So I'm very cautious. I'm very cautious on the cannabis sector. I'm one of the few people who managed to get out with a profit on Weed MD, and I don't want to have to rely on luck again to get a profit. So I'm gonna hold back on the cannabis sector unless something drastically changes. Michael says, "Why look at it if it's private?" It was about the branding. That was kind of the story. The story wasn't Lego. The story was how they were utilizing branding to make profits. So that was kind of the goal behind it. And plus, it's the final story. It was supposed to be a little fun, just Lego. And originally, when I brought that story up, I thought we were also going to have a discussion on how you can make money on Lego, and we never got there because we're so far behind. But in a nutshell, there's a lot of people out there that buy Lego sets and resell them for profit. So it's a big market out there because Lego will make a set, and it will be for a limited time. It might only be available for a year to a year and a half, or maybe 2 years at the most. Then they're gone forever. So people buy these and then they sell them like on eBay and things like that for big money, for big bucks, sets that you can't get anymore. And it's become quite a big market. I was going to talk a little bit about that, and that I didn't get to. Well, I kind of just did. Scratch. The big problem in Quebec is the demographic distribution. The French media's profits out from the fact that the older population can't get any valid information for themselves. Okay, fair enough. All right. Angelo says, "Hey, yo, what's up from Nova Scotia? Was living in Philippines for 2 years. I'm pretty diversified, but have a big chunk in MSTE. Unrealized loss of 9K. I'm not gonna sell it, but should I worry?" So yeah, we're talking strategy. Yeah, strategy is down. I think they're gonna be fine though. I think when we get the next big pump in Bitcoin, I think you're going to see, you'll probably see that unrealized loss disappear. Now, here's that thing. I think with the next big pump too, I would be a little bit wary if your adjusted cost base is pretty high. When you get back in the green in the next big pump, I would probably look at maybe getting out, get some profits, and because then you'll probably be able to get in a lot cheaper again if you're still interested in that ETF once we move into crypto winter. But keep in mind, this is speculation, right? This is my speculation, the way I sort of see what's happening with Bitcoin. And there's been a lot of weird stuff that has happened, and Trump has kind of changed the game a little bit. But that's kind of the way I see it at this point. All right. After TD commissions, I made $5. Oh, no, not TD. Growing up, who music were you listening to? Oh, that's a tangent that we don't have time for. It's a tangent we don't have time for, but come back next week and ask me, and we will talk a lot. I will just tell you this. I absolutely love almost anything from the 80s. So, Yeah, we'll have we can have a great conversation next time. Next time. Brian says I have to run. Have a great rest of your long weekend, everyone. Hi, what is your forecast? Joe says hi. What is your forecast? Let me just get back to the big screen. Hi, what is your forecast for the TSX 60 by December 2025? 20%? I think we're actually gonna have. I think the rest of the year is gonna be fine. I don't know why I'm saying it, but I do think that it will. I think it'll be fine. I think it will be fine. 20% might be a bit high. I would be more inclined to say about 10%, but so far this year, every time we think we know what's happening, everything goes completely the opposite way. So, maybe we'll be down 10%. I don't think that's the case, but it's gonna be fun. It's gonna be fun. Jack, holy banana bread! Am I ever late over 2 hours stream? I know we just hit three. We just hit three. We'll be wrapping this up pretty darn soon. Very, very darn soon. Let's see. Hell yeah, I got a lot to catch up on later. Sunday afternoon nap, gone way too good. I love it. It really did. I smoked a joint with my great grandma and passed out long after. Oh boy. Oh, I am caught up. Nice. Yep, it's almost supper time. I agree. I agree. All right, guys. Normally I ask for last minute questions, but we're at 3 hours. I'm sure that if you had a question, you've gotten it out now. We'll be back here on Wednesday for a live, so that'll be the market close. Can't wait. Always fun. And like I said, the bank review video with that little bit of extra in there. Oh boy, this is the one to watch. That will be out on Tuesday. Channel members can see that tomorrow. The 0 to 100K coming out on Friday. All right, guys, until next time, thank you for coming. This has been a fantastic afternoon, and I'm going to bid you a fond farewell. Take care, everyone. Bye.